year-to-date basis, Jonathan, and we welcome that. Yet, I think if you look at the investor community, they're taking a look at the U.S. equity market, they're taking a look at the tariff profile, and they're wondering maybe how much higher we can see the risk-on trade continue without some clarity on that front. Not to mention valuations in the U.S. are at historically high levels, sort of top decile at 22 times forward for the S&P 500, whereas the rest of the world looks far more attractive, at least on a valuation perspective, even when you adjust for the relative historical PE multiples in those regions around the world, and even when you adjust for sectors.
Aaron, have you got any thoughts on the tariffs themselves, just to focus on that to begin with, on how the cost will be distributed and whether companies will have to take this on the margin or whether they will be able to pass this on to the consumer? Because I think that's why, for many reasons, the Walmart numbers yesterday were slightly concerning to the broader market. Some evidence may be that they won't be able to pass some of this on.
Time will tell. That was an interesting earnings report because the numbers were relatively strong, but as you mentioned, the outlook was strong, and the outlook was weak, and yet it didn't include the unknown, which is tariffs. And I just think that's an important point there, that the outlook is weak, and yet it's not weighed down further by the prospect of increasing tariffs. Will it pass through to the consumer or the company? They even weighed in on that. They sort of made mention, I'm going to paraphrase something like, we're going to press on our manufacturers and our distributors pretty hard. The read there is to try not to allow for this to feed back into the consumer with higher prices. So that's certainly an unknown. And of course, the steel and aluminum tariffs could impact the auto industry precisely at a time when it would be extraordinarily unhelpful.
Aaron, can you extrapolate what Walmart said to the broader market? Again, this idea that you're pointing out that tariffs or not, there might be some weakening to come in consumers.
Right. I mean, I just sort of, if you read the earnings report or listen to the earnings call, Danny, that was a really interesting reality of a weak outlook, which is that they specifically stated that their range of revenue and earnings for the year did not incorporate any tariffs that have not yet been announced. And so, certainly, at the top of the hour, as Jonathan pointed out, I think that the market's trying to size up what's bark and what's bite on the tariff front, and we'll have to see. I think it'll probably be, at the end of the day, more bark than bite, but certainly we're going to see tariffs. And will they be as uniform as the president is threatening? I suspect maybe less so. There are certain regions in the world, though, like Japan as an example, where if you look at imports and exports and that balance of trade, tariffs may really not fundamentally impact Japan, and that could ultimately lead to a little bit of a tailwind. We haven't seen it yet, but a little bit of a tailwind in 2025 for Japanese equities.
So that's some of the stuff we need to work out, how to price it into equity markets. Aaron, when it comes to the good stuff that's already been priced in, Savita Subramanian from Bank of America and her team put out a note yesterday saying 19 of the 20 valuation metrics that they track have been priced in. But the one thing that hasn't is this idea of deregulation. You can see it just in the small caps, Aaron, the fact that they haven't taken off to the degree that we expected them to. Why do you think that, this idea that M&A is going to be coming back, that there will be deregulation, why is that not playing as big of a factor as we thought it would in 2025?
Well, I think that the tariff has stolen it. This tariff conversation has clearly stolen the show, but I push back a little bit on that view. If you look at the banking sector year to date, certainly there's an anticipation that more M&A activity, more transactional activity is going to occur. And that's been feeding up into the larger banks, maybe not the alternative asset managers on a year-to-date basis. So I would say that there is an expectation that we're going to see deregulation, and it is starting to price in to the banking system. As it pertains to small cap, the small cap thesis, I would still argue that that's fundamentally a question around interest rates. As you know, a lot of floating rate exposure in the small cap part of the market. The Russell 2000 is very exposed to floating rate interest, rather than the M&A sort of view that M&A is not going to positively impact small cap. I think that's more of a rate issue than it is a concern that somehow M&A is going to belly flop this year. With that said, too, first month and a half of this year, M&A has been quite weak. I think the weakest since 2005.
Aaron, is that because of policy uncertainty? Corporations are just going to wait, hang back until they get a bit more clarity?
think part of it is probably that it's policy around taxes, it's policy around tariffs, policy around regulation. But we're also 6-7 weeks into a new year with a new administration, and I think we have a long runway ahead of us here in 2025. I suspect we're going to see M&A activity accelerate. If you look at private equity, you look at the maturity of private equity funds, they're going to be forced to sell their assets because their funds are coming to the end of their life. And those things may not create IPO opportunities. They may create more M&A opportunities. And I suspect that's going to accelerate this year. If you just take a look at the trillion or so dollars worth of PE that needs to be sold and unwound from these funds so that they can give back capital to their shareholders.
Aaron, I'd love to pick up that point you said that you think we're going to see a lot more bark than bite when it comes to tariffs. But we have seen one bite, and that's the 10% on Chinese imports, an additional. How much has the market just absolutely digested that and moved on?
I think the market's questioning the duration of that, the purpose of that. Is it economic? Is it to raise revenue? Or is it to leverage China as it pertains to negotiations that are happening in Riyadh as specific to the war in Ukraine? So I think there are a lot of dynamics there that investors and market observers are trying to size up that are beyond economics.
Aaron, appreciate your time as always, sir. It's good to catch up. Aaron Cannon there of Clear Harbor Asset Management. We raised the question earlier this week whether the worst was behind us for the likes of Europe, stocks are close to all-time highs, or whether we're just whistling past the graveyard. It's really difficult to get a clear read on where the administration is going. I believe there is a genuine goal of realigning global trade. I believe that exists. But at times I also believe that officials around the president are trying to rationalize the president's impulses on any given day around the latest trade headline.
Absolutely, because also he comes out and adds additional materials or countries to the list every single day. One thing that is a clear thread between everyone I talked to in the administration, they want to see reciprocity. And they wanted to have that global realignment. But then you talk to someone like Peter Navarro, who wants to do away with the IRS and have the ERS. They want to have basically tariffs pay the taxes that American people pay instead. That's how they want the federal government to be funded. So I also think there's a spectrum of these personnel individuals around the president.
We mentioned briefly the lack of M&A so far this year, and it's early days still, only halfway through February, and this can all change. But it's notable that this week was the biggest weekly loss for the banks so far this year. The banks on the S&P 500 down by 2.8%, still up 8% on the year, granted, but that weakness is notable.
Yeah, and it's this idea that Bank of America has talked about. What was supposed to be a really strong thesis of M&A and deregulation hasn't played out as we expected. We have to come back to the thing we keep coming to over and over again, is that it's uncertainty. If you're looking at buying companies and they have operations in Mexico or Canada, or they have, honestly, any international exposure, it's probably a deal that's been put on ice.
These things can change. It is only February 21, and we're only 1 month into this administration. So let's see what the year has in store. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Hacker. Say, Yahara.
Hi, John. Standard Chartered shares are rising 3.7% in London after the bank topped earnings estimates. Stanchart reported strength in its trading and wealth business, and operating income from global markets jumped 45% in the fourth quarter. Plus, the bank will return $1.5 billion in buybacks to shareholders, bringing its total distributions to $4.9 billion since 2023. Here, New York Governor Kathy Hochul saying that for now, she doesn't plan on removing New York City Mayor Eric Adams from office, but she will take steps to curb his power, including creating a state-level deputy inspector general for the city. Hochul was under pressure to act after the Trump administration sought to drop corruption charges against Adams. And SpaceX CEO Elon Musk is calling for the end of NASA's space station program within 2 years. The current target is to end the program in 5 years. In a post on X, Musk said the ISS, quote, has served its purpose and there is very little incremental utility. Musk then reiterated his ultimate plan to go to Mars. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on this hour in about 30 minutes' time. Up next on the program, yields down, growth up.
What's necessary are the underlying conditions. So the underlying conditions that we need for yields to come down for growth to go back up. And as Jonathan mentioned earlier, the 10 years come down, or rates have come down every week since Donald Trump's been president. So if we can continue that for 52 weeks, that'd be great.
Let's see if we can. We'll get the views of Dan Clifton of Strategas up next on the program. Live from New York City this morning. Good morning.
Is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Live from New York, welcome to the program. Equity futures on the S&P totally unchanged in the bond market. Yields down on the session and pretty much unchanged on the week. We're down 2 basis points on a 10-year to 447.98. Under surveillance this morning, yields down, growth up.
What's necessary are the underlying conditions. So the underlying conditions that we need for yields to come down for growth to go back up. We've got this affordability crisis in housing. We've got an affordability crisis in the auto payments. So one thing that would be very stimulative, and as Jonathan mentioned earlier, the 10 years come down, or rates have come down every week since Donald Trump's been president. So if we can continue that for 52 weeks, that'd be great.
So here's the latest this morning. Treasury Secretary Scott Bessent touting the Trump administration's path to non-inflationary growth. Dan Clifton of Strategas writing the US is in the midst of a liquidity bazooka, which should temporarily bring down bond yields and weaken the US dollar. This serves as a cushion for investors as they grapple with the issues of tariffs and other headwinds. Dan joins us now for more. So Dan, let's start with the tariffs if we can, and good morning to you. I've mentioned these dates a few times now. In early March on Canada and Mexico, middle of March will be focused on steel and aluminum, then the reciprocal tariffs in early April. When you're having these conversations with clients at the moment, Dan, what do you tell them that you expect and what do you tell them that you don't expect?
Yeah, first, good morning and congratulations on a great interview with the Treasury Secretary yesterday. If you look at what the discussion is about right now, it's about tariffs. It's a lot about what we call the spinach. How you get a reconciliation bill done. What did the tariffs look like? And what we've been trying to argue is that in the beginning of this year, we actually have a good cushion. That's the financial liquidity bazooka that you're seeing. And Jonathan, just to give you some context, next week we'll do about $150 billion of net new liquidity into financial markets. That's bigger than anything Donald Trump's talking about on tariffs or any type of spending cuts or federal layoffs. So we are in a very, very good position. And the way that we're talking to this about clients is this is a temporary liquidity bazooka. We should be using this time to be able to make policy changes that will make it easier for Treasury when the debt ceiling gets lifted later this year. And so you're starting to see those discussions happen. In the Fed minutes this week, they were talking about getting rid of quantitative tightening, something Treasury Secretary said on your show yesterday would be critical for them if they're going to be able to increase coupons at a later date next year. There are other changes that we need to see. How about a lower budget deficit, which could possibly come as you get into those April tax revenues? And that's getting those fundamentals in place that will then make it easier to deal with some of the policy issues that Trump is talking about. And I would say that April 1st is the key date. That's the date when all the government agencies are going to report on where tariffs are going to be, whether it's universal, reciprocal. But ultimately, if you look at the headlines this morning, they're talking about Europe doing a deal with Trump on trade now that he's threatened tariffs. And I think a lot of investors are starting to look at it as a transactional push, not a real tariff push. And we'll see if that changes later on this year. But for now, we're in a very good position that's much larger than anything that we're doing on tariffs.
Dan, how soon after that April 1st meeting they're going to have when everyone reports back, you know, everything that's going wrong in trade between the United States and other countries, how soon after can we see Trump levy those tariffs?
Yeah, well, he's talking about doing it like the next day. I think that's a way of accelerating negotiations into February and March and try and get some sort of resolution. The key issue, Anne-Marie, is why are they waiting until April 1st? Well, they're trying to use a new power called the International Economic Emergency Power Act to put tariffs in place. And there's some legal issues associated with whether they're going to be able to use that. And so what I saw from the January 20th executive order was a very thoughtful process where they said, we're going to look at all the angles. We're going to talk to the career attorneys who've been working on this for a long time. We're going to make sure our I's are dotted, our T's are crossed, and that we're on very good legal ground if we're going to be able to move forward on this. And the reason that that is important, if they invoke IEEPA, as it's called, and then go to court and lose, they're going to lose their main tariff power. So I see this as a due diligence process, and I do think that they will be in a better position to move forward if they needed to on April 1st, but it probably won't be for another couple of weeks or maybe even a month until they actually have all those reports in place.
You mentioned the debt ceiling. How difficult is it going to be for Congress to raise it?
Yeah, well, I think the consensus forecast coming into this year was that it would be very easy because the Republicans have complete control. But as you know, the Republicans have the smallest majority in the House of Representatives since the Civil War, and they have probably 20 members or so who've never voted for a debt ceiling increase before. So it's going to be very tough. And right now what the Republicans are saying is that they're going to put it into a reconciliation bill and try and raise it that way. And so for you to get those members' votes that have never voted for a debt ceiling increase, there's going to have to be significant spending cuts that are going to start getting government spending down as a percent of GDP. And as you know, if you make that move in that direction, you may wind up losing some moderate Republican members from California or New York. So there's going to be a push and pull, will be determined by that reconciliation process. The good news is that the longer the debt ceiling is in place, the more liquidity that you're going to have in the financial markets. And what we find is that that liquidity brings down bond yields, it weakens the dollar. And so financial conditions should stay loose while they're debating the bill overall. And we estimate that they won't have to raise the debt ceiling until mid-August. But as you start to get to May, June, July, the markets are going to start focusing on whether you can get a reconciliation deal. And if you do, will the debt ceiling be lifted in it? And if not, then you got to do a bipartisan deal. And the Democrats will extract very significant concessions if you're going to need their votes for the debt ceiling increase.
Well, if we do see a bond market where yields go down and dollar weakens, it's something that'd be welcomed by the Trump administration, Dan. And to that point, the use of non-conventional type policy, it's got some serious people on Wall Street thinking what else they could do to achieve that aim. Jim Bianco of Bianco Research is one of them, who says that we could see something like a Mar-a-Lago Accord where they force different central banks, different governments to swap out the current treasuries they hold for longer-term U.S. debt. Do you think a proposal like that could be one we'd see enacted?
Well, I would say just thematically, Trump is changing the world order, right? So just as a starting point, whether we do a deal or not, you're seeing big changes coming. Is there going to be Ukraine assistance for critical minerals? How are European governments going to respond to his threat of higher auto tariffs? So you're going to get it in piecemeal, or you're going to get it in a larger deal. And I think countries have to say, should we start looking at a larger deal? And are we ready to do that right now? We're probably not ready to do that right now. It's something that could come later on down the road. The question is, if you're moving to a system that's going to be more tariff-based and less tax-based, then you're probably going to have to do a deal like that. If you're on the current process or the first term process, which is, well, we're going to raise tariffs on China and just threaten everybody else, you don't really need to do the accord that you're seeing or being discussed by some of Trump's advisors. And it's more of a piecemeal strategy. But if you're going to go larger and you're going to try and remake the global trading system, then at some point you're going to need a Plaza Accord version that we saw 40 years ago to be able to do that. And the Mar-a-Lago Accord is a great way to talk about it, at least thematically, if not practically.
At the moment, it looks like they're going big. Dan, it's good to hear from you. Thank you, sir. Dan Clifton there of Strategas. I remember when Secretary Besson was not Secretary Besson, sat in that seat. I think I was away, and Danny and you guys were talking about what? A Mar-a-Lago Accord back in the summer of last year.
Yeah, we were. And again, it's being considered because we've heard some president's advisors not necessarily naming it that, but talking about this. But again, I think Dan puts it really well. It has to come hand in hand with a complete reordering of trade.
There will be losers. Mexico, focus on the quarter-on-quarter data. The biggest quarterly contraction for the economy since 2021, and it could get worse for them in 2025. Up next on the program, Robert Fishman of Columbia University on US-Ukraine tensions.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Listen carefully. Can you hear the rhythm and
in the markets. Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Live from New York City, welcome to the program. Equity futures just turning positive on the S&P 500 by close to 0.1% on the Nasdaq 100. We're positive as well, up by 2 or 0.3%. And likewise on the Russell, the small caps up by 0.3% this morning. We're 2 hours away until the cash open. Let's get you some morning movers. We can do that with Yahara Hackers. Hey, Yahara.
Hi, John. We start with Rivian. That's getting hit here in the pre-market, down 3.6% after the company gave a weaker outlook. Before, Rivian said it would deliver 14,000 vehicles. Now it says that number looks more like 8,000, and they're citing tariffs and uncertainty over EV tax credits as reasons for that cautious outlook. And next up, we have Block. Those shares are also sliding here, down 9%. The digital payments company led by Jack Dorsey reported a big miss on adjusted earnings. And while it does expect growth to accelerate as the year goes on, it seems like investors wanted a little bit more when it came to the profit outlook, which it kept in line. And this one's for you, Anne-Marie. I know you like your Celsius drinks in the morning. Shares are up 33% here. They're soaring. The company is planning on taking a bigger share of the booming but increasingly more competitive energy drinks market. They're going to buy rival Alani Nu, and it comes at a critical time for Celsius. It's seen its revenue slow due to all these upstarts, but investors obviously thinking this is the right move. John?
Yahara, thank you. Appreciate it. Stock is up by 33%. Did not know that you were a Celsius influencer.
It's only every few months if I go out the evening before and then I have to wake up at 3 a.m.
Oh, so I see you with a can in the morning. I know what happened the night before.
Yes.
Okay, all right, good to know.
It's not often.
Let's get you some top stories. On our radar this morning, Israel saying a body returned by Hamas is not that of a hostage taken by the militant group in October 2023. The exchange complicated talks for the second stage of the current ceasefire. Just shocking scenes, barbaric in the last couple of days.
Absolutely. They are making Hamas, a terrorist organization, is making the release of these hostages, which has been done under a deal, into an absolute spectacle. And then on top of that, this woman and her 2 young children who were kidnapped by Hamas, a terrorist organization, died in their custody. Their remains were sent back. And then the IDF came out and said, actually, those are not the remains of that woman, which has been just absolutely heart-wrenching to read about.
Because also, underscoring all of this is supposed to be the time that we're moving towards something that looks like peace, moving towards something that looks like unity. I don't know how seeing images of child-sized coffins gets us anywhere close to that. If anything, it sort of signifies the failure, the devastation, the loathing. What does this do to the Israeli populace? You have to imagine that it hardens them in a way and makes it harder for these types of peace negotiations and ceasefires to continue on.
It certainly doesn't help. Any updates on that front, we'll bring them to you throughout the morning here on Bloomberg. Let's turn to this story as well. The National Economic Council Director, Kevin Hassett, confirming tariff revenue could be used to replace income taxes. Hassett saying tariff revenue from China will amount to between $500 billion and $1 trillion over the next 10 years.
Well, I guess we have to see what the tariff revenue is going to be. Right now, just an additional 10% was put on. When he talks about numbers as big as that, you have to think just from China alone, how much higher can that rate get? I think this sounds like the maximalist approach that you do sometimes hear from the Trump administration, but no one actually takes seriously that we're all going to not be paying taxes into the IRS.
I think Torsten Slok of Apollo lays out really simply that the total revenue raised from income taxes is $3 trillion. Total imports into the U.S., $3 trillion. So in order for this to happen, you'd need 100% tariffs on all imported goods. Not to mention, you'd probably get less goods coming in because of the tariff. So he says maybe you need something like 200% in order to replace income
We've got a
tax.
spending problem. Doge is going to solve it all.
Yeah.
Hope they solve some of it.
Yeah, unless they cause a recession in D.C., and then we're all happy, but D.C. is very unhappy.
Look, a lot of this is tongue-in-cheek, but that's a big focus for this market increasingly.
No,
what happens with those spending cuts and what it means for the data.
It is, and that's why we combed through those weekly jobless claims to say, has it shown up yet? it hasn't shown up. And at the moment, it doesn't seem like a big impact, but I guess, does the threat of losing your job for some people, not just in DC, but for government contract workers, for local governments, is that enough to change behavior in consumers?
Didn't see it in jobless claims just yesterday. We'll see if we see it in the coming weeks. Let's turn to this story. The United States putting sanctions on the table in Ukraine war talks. Treasury Secretary Scott Bessent telling us yesterday that the United States is prepared to either ramp up or dial back penalties based on Russia's willingness to negotiate.
So basically, economic warfare is being used here in terms of sanctions to either get Putin to the negotiating table or punish him if he's not coming to the negotiating table. I'm reminded of what the Biden administration did really in the 11th hour on their way out. They took the harshest steps they could have taken over the course of the 3 years by outright sanctioning some Russian crude. Potentially that is something we could see this administration continue to do, this new administration, if Putin is not playing ball with Trump.
Let's extend the conversation. The Trump administration keeping up pressure on Ukraine's President Zelensky.
He needs to come back to the table, and we're going to continue to have discussions about where that deal is going. Again, we have an obligation to the taxpayer. I think this is an opportunity. The president thinks this is an opportunity for Ukraine going forward. There can be, in my view, nothing better for Ukraine's future and for their security than to have the United States invested in their prosperity long term.
So here's the latest this morning. The Trump administration looking to strike a deal over minerals and resources in Ukraine. Zelensky writing on X, Ukraine is ready for a security agreement with the United States after US and Russian officials met this week to discuss an end to the war. Edward Fishman, professor at Columbia University and the author of the book Choke Points, American Power in the Age of Economic Warfare, joins us now for more. Edward, good to see you, sir.
Great to be here with you today.
Let's start with the book. First of all, congratulations. I know you look back at the last couple of decades of foreign policy and the evolution of it on the US side of things. Give us the essence of that book and where you started and where it came from.
Sure. So the thesis of the book, John, is that we are living in an age of economic warfare. Sanctions, tariffs, export controls, they've just become the primary way that great powers compete with each other. Obviously true of the United States, but increasingly true of our allies, the EU, Japan, China, India. And I think that this, sometimes people think, well, is this a choice? Is it because, Trump loves sanctions and tariffs and stuff like that? But I think it's really rooted in a structural mismatch, that you have a global economy that's still designed for the benign geopolitical environment of the 1990s, as opposed to the much, much more hostile one that we have now.
What do you say to critics, sometimes myself, that say sanctions don't work, they just create new markets?
What I would say is the question is, do sanctions work, right? Does anyone ask, does a bomb work? Well, a bomb is very good at blowing up something, but it doesn't always get you what you want. U.S. sanctions in particular are extremely effective at exacting economic damage on other countries. Whether that translates into the political outcomes we want, not always, but did 20 years of war in Afghanistan do that? No.
But what we've seen from the Biden administration, because they're the one that levied all of these sanctions, froze the Russian assets, did any of that work? Because in the end, we're about to enter the 4th year of this war.
Sure. So I think the initial goal that Biden had was to use the threat of devastating economic pain to deter Putin. And that clearly failed. The second that Putin invaded Ukraine, that threat failed. You have to ask yourself, well, why did it fail? Is it because sanctions could have never worked? The evidence actually shows, it's something I talk about in my book, that Russia underestimated the will that the West had to impose sanctions. And the best evidence of that is he had this war chest of $630 billion in sovereign reserves, and half of them were left right there for the US and the EU to freeze. So if he had thought that the US was going to go that far, he would have diversified much more broadly into RMB, gold, and other assets.
And you get this acknowledgement from the U.S. that sanctions are leveraged with Moscow. You see that in the current discussions. I wonder what you make of those current discussions. Scott Bessent, again, was on this program yesterday saying that they are still a tool that they are considering. But do you see it in the language they're discussing? Marco Rubio talking about unique economic opportunities. Is it a tool to help the U.S. to improve the economy and that relationship, or something about the war in Ukraine?
It's like, Danny, Putin is trying to pull a fast one on Trump right now. He's basically saying that you should lift sanctions because it's in America's own interest. And they're trying to couch, allowing U.S. oil majors back into Russia as sort of a carrot to give to the U.S. The reason U.S. oil majors left Russia, A, is because of U.S. sanctions. It's not because of anything Russia did. And B, the projects that, for instance, Exxon was involved in the Russian Arctic, which I was involved, by the way, in getting them out in 2014, are no longer profitable. Drilling in the Russian Arctic is extremely expensive and is just not profitable at current oil prices. So I hope that the Trump administration doesn't kind of fall for this, illusion of business opportunities in Russia. I don't think they will. But, some of the things I think, as you said, that Marco Rubio has said are a little concerning.
Well, you even write on about the point that it would go in deference to the American energy dominance goal if they do something like that. But at the same time, it's not as profitable. So what would it mean for domestic production of energy if there is some sort of deal struck with Russia?
So let's say in a world where Trump actually agrees with, Putin's view and says, okay, let's lift sanctions. I mean, what would senators and members of Congress say from Louisiana if we're prioritizing Russian LNG over U.S. Gulf Coast LNG? What would the Alaska delegation say if we're prioritizing Siberian oil exports over Alaskan? It's a little confusing, to be honest, and that's why I don't think we're going to go there. And I think if you're just looking at this even from a very narrow America First Trumpian view, you'd actually think, Anne-Marie, that you would build on those final sanctions that Trump put in place, which sanctioned Russian crude at the end of the administration. What that would do is it would provide a little price stability to give U.S. shale more room to produce at profitable rates and probably create market share for American LNG.
Well, isn't Trump just in the middle of negotiating mode? He's trying to get Putin to the table. He wants, I think, a ceasefire to start.
Well, look, I can't read Trump's mind. I think what I've seen so far is that the Russians, at least, are trying to make this a bilateral discussion about U.S.-Russian relations, and specifically about normalizing U.S.-Russian relations. The Russians don't want to talk about Ukraine. They're trying to basically get what they want and say that, lift sanctions, and then we can talk about Ukraine. But I think what you were saying, Danny, is actually right. Sanctions are the key leverage. So the idea that you would give that up sort of at the beginning doesn't make too much sense.
Let's talk about Ukraine. What do you make of the minerals pact? Do you think something gets done?
I do think something will get done because, look, for the Ukrainians, American support is effectively existential. I think the deal that we saw, if we can agree that the leaked deal was the real deal, was something that no leader of a democratic country could sign on to, right? Where you're effectively giving over half of your natural resource wealth in exchange for some vague commitment. The news that I've seen recently is that the U.S. side has kind of softened the terms and said this is no longer, under New York law. It's going to be, just an MOU. Maybe this is something that can allow the U.S. to declare victory or allow Trump to declare victory and justify support for Ukraine. But look, I think, broadly speaking, if the U.S. and Ukraine continue down the current path, Ukraine could wind up becoming a really significant economic partner to the United States and a real way to diversify away from, the choke point that China possesses over critical minerals.
Just to put a bow on things and look back over the last couple of decades, we've talked about our failure, maybe the limits of being able to influence our adversaries. Can we talk about the limits of influencing our allies? Why has it been so difficult to get the Europeans on side? And not just under President Trump, but under President Obama, under President Biden. What's been so hard?
So look, I was involved in negotiating the original Russia sanctions with the EU in 2014. And look, it was not fun. It was hard. We were oftentimes herding cats. But what I would say is I also had to be empathetic to them, because from the U.S., we could impose as many sanctions as we want on Russia, and it's not really going to affect us. Maybe the only thing that would affect us is if you took a lot of Russian crude off the market, you'd have higher oil prices, right? But nothing else is going to affect us. But I remember, and this is something I talk about in the book,
sure.
I once met with a Lithuanian dairy farmer. By the way, Lithuania was the country that was most affected by the sanctions, even though they're really hawkish. And she had lost 50% of her business because of the sanctions. And we were terrified. U.S. government, we were like, oh no, what is she going to say? She said to us, you should be hitting Russia harder. And that's because some European countries like Lithuania, Estonia, Latvia, they feel viscerally threatened by Russia. But if you're living in, Madrid or Paris, the Russians seem pretty far away.
Do you think the Europeans are equally as empathetic with the American position? Because the American position right now, how many times do you get a European tourist coming to the United States and saying, the infrastructure's terrible and our infrastructure's great? Let me tell you why. There is an $800 billion plus defense budget in America that the Europeans do not have. The American taxpayer has been subsidizing the European infrastructure story for a long, long time. Do you think they are equally as empathetic with the American position?
No, and I think we can sort of separate the military situation from the economic sanctions situation. On the military side of things, look, the EU needs an army. They need an independent defense capability. Part of the problem, frankly, if you go back to the early 90s, is the U.S. has actually discouraged this because we viewed an EU military as a potential threat to NATO. So the U.S. in some ways has wanted to have it both ways, where we say, EU, don't have a military because that would be a threat to NATO, but please share the burden. Hopefully, if the Trump administration says, look, Brussels, go ahead, build an army if you can get political support. You know, I think that would be a good thing for both Europe and the United States.
We've got a lot to talk about through the next year. Looking forward to doing it with you, and good luck with the book sales as well. Congratulations once again.
Thanks so much for having me.
Thank you, sir. Edward Fishman there of Columbia University. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. United Health Group shares are tumbling nearly 10% amid reports that the Justice Department has launched a fraud investigation into its billing practices. The Journal reporting the DOJ is looking into United Health's diagnosing practices after claims that Medicare paid the company billions of dollars for questionable diagnoses. Meanwhile, President Donald Trump met with Apple CEO Tim Cook at the White House yesterday. Cook is among the tech leaders who are trying to foster a closer relationship with Trump since his re-election. Apple, of course, is caught in the middle of an escalating trade fight between the U.S. and China at a time it's seeking to revive its sluggish iPhone sales. And Amazon MGM Studios has gained creative control of the James Bond film franchise. The company formed a new joint venture with longtime custodians Michael Wilson and Barbara Broccoli, ending the Broccoli family's control over the franchise. The move paving the way for Amazon to offer more James Bond content. That's your Bloomberg Brief. John?
Henry Cavill, set in the 60s. Do you know how many times I've seen that online? That's what the people want. Henry Cavill set in the 1960s.
I can't think about him without, this is horrible, but with that CGI mustache situation.
We can fix that, sort of classic British Bond.
But if Amazon owns it, they need to do a redo of that. They need to make sure that everything looks good. I can't watch him on anything anymore because of that.
I've got some faith in Bezos. I did not like how the Daniel Craig stuff ended. Didn't like that at all, but that's a story for another time. Up next on the program, transitory tariffs.
To the extent that Team Transitory at the Fed is still has any credibility, I would say that tariffs are the most transitory thing there are.
Tell us what you really think, Mr. Secretary. Jason Furman, the former chair of the Council of Economic Advisors under President Obama, joins us next. From New York, you're watching Bloomberg TV.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Things a little calmer this morning. Equities not doing much. Similar moves in the bond market. Equities just about positive on the S&P 500. Bond yields lower by close to 2 basis points. A break of 450 on a 10-year, 448.76. Under surveillance this morning, transitory tariffs.
To the extent that team transitory at the Fed is still has any credibility, I would say that tariffs, if they have any price adjustments, are the most transitory thing there are. So I don't think that should hold them back very long.
So here's the latest this morning. U.S. Treasury Secretary Scott Bessent defending the administration's trade and tariff policy. Jason Furman, the former chair of the Council of Economic Advisors, with some sharp words for the previous administration, writing in Foreign Affairs, Biden never did the hard work of explaining to the public that enforcing further limits on trade with China imposed real costs on Americans, but that the national security gain was worth the economic pain. Jason joins us now for more. Now, Jason, I imagine you didn't write the headline, the post-neoliberal delusion and the tragedy of Bidenomics, but certainly the content got a lot of attention as well. What kind of feedback did you get from your own party after publishing that?
You know, I've been pleased by the reaction I've gotten. There's certainly some people that have been very negative and very critical. I've heard from a lot of Democrats who were happy that I wrote it and think we need to figure out a different way for policy going forward. And, I've also, heard from people that generate ideas. But the one feedback I haven't liked is there's been people from the Trump administration who have leaped all over it without realizing it is also a description of many of the problems, in some cases more severe, of their own policies.
What do you think is the most severe problem in your mind of what the Trump administration is offering right now?
In terms of the economy, tariffs, especially if we actually go ahead with anything on Canada and Mexico, which are just so inextricably linked with the way in which America makes things. I thought it was refreshing that the Treasury Secretary was effectively admitting that it will actually raise prices. I would warn him against using the word transitory for inflation. You don't know what gets built into expectations. I don't think the Fed could afford to have the inflation rate go to 3% for a year or two and say, but don't worry, it's just because of the tariffs. We're going to keep cutting rates even though inflation is 3% now.
Jason, is it going to be hard for the Democratic Party, though, to throw stones at this administration when it comes to tariffs when we had such high inflation and the Biden administration refused to remove tariffs on places like China?
Yeah, I wish the Biden administration had removed a lot of those tariffs. I wish the Biden's U.S. trade representative hadn't said the idea that tariffs raise prices has been debunked. But, I don't think whataboutism helps your economy. And I don't think that, if tariffs raise inflation by 0.5 point and we end up with 2.9% inflation, it may be that Americans aren't really noticing it quite as much as they did a couple of years ago, but the Fed will certainly be noticing it. The Fed's not cutting rates in a world with inflation like that, and in fact, it might even be raising them.
Jason, to that point, what happens if a similar mistake is made this time around? And by a similar mistake, I mean this idea that you point out that John started us with, that tariffs are being put on, and they're not necessarily described as something that you need to grit through for national security. And what's more, something that raises revenue and brings down taxes, when the reality might end up being different on the ground.
Yeah, I mean, it's a terrible way to raise tax revenue. It's highly distortionary. In some cases, it is a national security tool. And for example, sanctions on Russia. No one ever said America's going to get rich by putting sanctions on Russia. We understood that we were paying a small economic cost by not doing business in Russia, but they're going to pay a disproportionate cost. And I think it is, if the president uses his leverage well, and not clear that he is, something that would help bring them to the table. That's basically what tariffs are like. And where you especially don't want to do them is where they're on intermediate inputs that are needed for American manufacturing, when they're on things that consumers want, when then there are things that are made by our allies, when they are things where you could cause trade diversion from another country. Just lots and lots of the ones that they've talked about are just very poorly designed.
In this scenario, though, Jason, we saw last time around, tariffs were something that specifically hurt growth. Which is the bigger concern this time around? Is it some sort of inflationary impulse, or is it weakened growth and weakened demand?
In the medium and long run, it's definitely growth. When I teach tariffs in class, we don't focus on the inflation aspect of them. We focus on what it means for both consumers having worse options to buy things, and producers who are effectively putting a tax on as well, having a harder time selling things. In the current conjunction, though, we have underlying inflation at around 2.5%. If it falls by a few tenths, we're in great shape. The Fed can resume rate cuts. If it rises by a few tenths, the Fed has to call off any rate cuts, and it rises by a few tenths more than that, and they're increasing rates again. So given where we're poised right now, tariffs are just that inflation aspect, and the interaction with the Fed, I think, really is quite important.
Jason, got 40 seconds left. I wanted to squeeze this in. Do we have any experience of threats this large lingering for this long with regards to tariffs? Do we start to behave as if tariffs are just going up?
Yeah. Record amounts of uncertainty that businesses are facing right now. Just even threatening tariffs and unthreatening them has been studied by economists, and it has an effect, and that effect is a minus. So it's not something we should be playing five-dimensional chess with. We should be clear, transparent, and ideally limited.
Jason, appreciate your time and a publication. Enjoyed the piece. Thank you, sir. Jason Furman there at the Harvard Kennedy School on the latest with trade and a whole lot more than that. In the next hour of Bloomberg Surveillance, we'll be catching up with Nadia Lovell of UBS, Dan Niles of Niles Investment Management. Now, at the start of the year, Dan had 5 picks. We're going to pick out 3 of them, 3 big winners so far in 2025. We'll catch up with Tiffany Wilding of PIMCO, and we'll speak to Ed Al-Husseini of Columbia Threadneedle. From New York, the third hour of Bloomberg Surveillance, up next.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are 3 fundamental things. Number 1, they do everything in teams. Their operations, their patients they see is all team focused. Number 2, they value process, but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number 3, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Everything that President Trump's administration is doing will be disinflationary.
Our view is that once tariffs kick in, they'll be more inflationary than the market expects.
Any real deficit reduction that we may see under this administration is likely going to be a 2026 story.
Stocks basically are pricing that the tariffs are a bluff and growth is going to be great. The odds look skewed in the other direction.
It's clear that the market is focused almost entirely on inflation risk.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Haven't been able to say this for quite a while, but it's been a quiet week so far. In the grand scheme of things, equity futures on the S&P 500 just about positive by 0.1% on the Nasdaq 100 with the opening bell about 90 minutes away. The Nasdaq 100 positive by a third, up by a third also on a small caps. If you want the scores in the bond market, the 10-year yield was lower yesterday, down again through most of this morning. We're down by 2 basis points, just short of 450, a break of that level in the last 24 hours. On the front end of the curve, the 2-year down almost a basis point to 426. Going into some economic data later on this morning, some PMIs at 9:45 Eastern time. The PMIs out of Europe, not great, not impressive, and there are many people in this market who are looking through those tariff threats.
Looking to the tariff threats at the moment. Many say, like, look, Trump is in negotiating mode. But Jonathan, you bringing up the calendar. March 4th, we're going to finally find out if that pause on Canada-Mexico is real or potentially the tariffs come into play. March 12th, 25% tariffs on aluminum, on steel, and April 2nd, auto tariffs in the range of 25%. Can you look through all of this? It's been a lot of bark. Only one place has had a bite, and that's in China.
I think it's so remarkable that this bond market has been so unmoved, not just by the tariffs. Kelsey Barrow, JP Morgan, was on earlier talking about this idea. Not only has it been stoic in the face of tariffs, we had CPI that surprised to the upside, retail sales that surprised to the downside. None of that moved the needle. If this was last year, we'd have this crazy volatile bond market that was moving back and forth. Even after Trump's election, how many banks did we hear from saying FICC trading is going really well because of the volatility? It's completely disappeared from this market.
Front end of the curve, it's really anchored. In the middle of March, towards the end of March, the Federal Reserve's going to come out and put out a forecast. How do you provide any guidance right now, given some of the headwinds and tailwinds they might be getting later this year?
Maybe it looks something like Raphael Bostic yesterday, who said, what I believe today could be completely different in 6 months. Again, maybe it's a market that will look at that and just continue to sit on its hands, because I'm not sure what you do with something like that.
BNP Paribas started the week by saying the Federal Reserve was comfortably numb and not willing to do anything anytime soon.
Well, what can they do? Say these tariffs are being used as a negotiating tactic. Are we going to get a deal April 1st, April 2nd between the EU and the United States? Potentially not. At the same time, Trump is just flooding the airwaves. It's not just tariffs. He's talking about the budget deficit, DOGE, tax cuts, a peace agreement in the Middle East, a peace agreement when it comes to Ukraine. It's hard to really understand what is going to stick.
You know what's interesting? How we ended 24 and what we were looking for in 25. People were hoping the focus would be on tax cuts first and then we'll deal with the tariffs later. And it's flipped. It's the tariffs first. And maybe the tax cuts come at the end of this year, but maybe. In addition to that, it's spending cuts. Spending cuts have had a bigger factor on this market, maybe, than tax cuts have. The prospect of DOGE cutting jobs in Washington, D.C., I would say over the past few days has become an increasing focus for a lot of notes that I've seen.
There's two elements of it. One is the economic impact of that and why we're also concerned with the weekly jobless claims that come out. Do you see some of the ramifications start to come through? The other impact is something that Peter Schiff of Academy talks about. This idea that you can get the deficit down via budget cuts without hurting the economy. And that's part of the reason he argues that we've seen a bit into the long end of the curve.
A quiet finish to the week going into the weekend, and let's hope it stays that way. Equity futures just about positive on the S&P. Coming up this hour, we'll catch up with Nadia Lovell of UBS with stocks near all-time highs. Dan Niles of Niles Investment looking ahead to NVIDIA earnings, and Ed Al-Husseini of Columbia Threadneedle on an overly optimistic outlook. We begin this hour with stocks looking to close out a second straight week of gains. Nadia Lovell of UBS writing, we remain constructive on the medium-term equity outlook, but near-term, the risk-reward is less compelling. While we are staying invested, we advise hedging strategies and standing ready to buy potential dips. Nadia joins us for more. Nadia, good to see you. Good morning.
Morning.
What would lead to those potential dips?
Well, you know, as you've been talking about the uncertainty around tariffs as those dates approaches us, we could see a pickup in volatility. It has implications for inflation. It also has implications for overall economic growth. And so I think we're all watching those days how much of that would stick. We do think probably that 25% tariffs on aluminum and steel will stick. We saw that in the first Trump 1.0 to protect American steel industry. The 25% tariff on Mexico and Canada, we think that that continues to get pushed up. That's likely going to be more a negotiation.
This week, transatlantic all-time highs. The S&P 500, record high. The DAX in Germany, record high. When you speak to clients, just shine a light on those conversations for us. Do they believe any of this happens?
You know, I think that we are a bit surprised that we haven't seen an increase in volatility this year. We were expecting that as the new administration takes office. But what you're seeing is volatility at the index level has been dampened, and I think people are surprised by that. But when you look under the hood, there's rotation happening, and there's dispersion, and that's what's dampening volatility. So I do think that we are trying to advise our clients to be prepared for that pickup in volatility as we enter into March and April. But I also think that what clients appreciate is that rotation that's happening, that broadening out. You have like 9 of the 11 S&P sectors that are now outperforming. Over 50% of the index are outperforming. Compare that to the last couple of years. It was like 25, 30%. So I think clients are starting to appreciate that rotation finally happening.
Well, part of what's happened with that rotation is a Mag 7 that's underperformed. I think it's only up something like 0.05%, around there so far this year. But what has outperformed in tech really noticeably is what's happening in China. China tech has been off to the races. It is on fire. Hong Kong tech shares up another 6.5% today after Alibaba earnings. Are the two related? Is there some degree which America tech lagging behind is because China is starting to pose a real threat?
I don't know. We don't think that China poses a real threat, but we do think that there's opportunity there. We actually have had a call on China internet stock for some time, so it's nice to see that they're starting to outperform. I think what DeepSeek showed is that China still has an AI industry, despite the fact that we've had chip restrictions. So we think that there's more upside to go in there. When you look at China internet versus the American peers, valuation gap is quite wide. You know, you have those stocks trading at about 14 times, nearly half as less as the American peers. And also, we think that it feels like the government is going to be more supportive. We had that private symposium earlier this week as well. And then you had Baba, Baidu, all had great earnings. And the fact that Baba is saying that, you know, CapEx over the next 3 years is going to be more than that of the last decade is quite encouraging. And so we think that there's a little bit more to go in that trade. And I don't think that over the longer term is at the expense of U.S. tech. We'll see what, you know, the leader NVIDIA reports next week, but the CapEx story that we've heard from those cloud players this past earnings season should be a positive for some of those semiconductors and compute companies.
Just on that, while we're talking about event risk dates, away from the tariff dates, February 26th, NVIDIA earnings, how big of an event risk is that?
You know, I think historically you've seen like mixed trading around NVIDIA. Sometimes you have the stock trade up into earnings and then sort of a sell of the news. And it has become a macro event. I don't know how much of a macro event at this time it is around because the stock is down going into earnings. So, you know, there's sort of some expectations of volatility around that. And I think people are likely going to be more focused on what the administration has to say in March and April. And NVIDIA is no longer so much of a macro event as it has been over the last, I would say, year and a half.
So policies, though, can infect that stock when it comes to semiconductors coming out of Taiwan or export controls. How aggressive do you think the Trump administration is going to be?
You know, the fact that he met with the CEO of the company, I think is quite positive. I do think as President Trump continues to say that America needs to continue to innovate. So I think he's going to be mindful in terms of not doing anything that's so aggressive that it dampens that innovation. But at the same time, we want to protect American technology and not have it get in the hands of China. We want to be ahead of that. So we think that on the margin, you could see some restrictions, but I don't think it's going to be overly aggressive. And it's not necessarily going to be against like Taiwan.
We talked about all the risks that this market faces, and you're, in the medium term, you're constructive. At what point do you need to see the good stuff coming out of Washington, the tax cuts, the deregulation, to get a little bit more bullish?
I mean, reality is we always thought that those tax cuts will probably be quite minimum and likely in the second half of the year. I think what you want to see from the president is not tariffs that are overly aggressive, no blanketed tariffs, right? We don't want to see tariffs on Mexico and Canada because that would be disruptive. You are seeing progress, I think, in terms of deregulation. We'll see who take the helm in terms of vice chair of supervision for like the banks. Yes, this past week we see some volatility around financials, just given the headlines around the President Trump administration sticking with those stricter regulations around M&A of the Biden era. But again, you know, those are guidelines, and the interpretation might be totally different than the Biden era. So that throws a monkey wrench in the most bullish case for the banks. We don't think that is a deal breaker.
You'd buy the weakness in the banks this week?
We would buy the weakness because there are other things at play that we think continue to support banks. So think about, we have an economy that's still chugging along. We have trading activity that's also doing well, asset and wealth management. And then there is that possibility for deregulation. CCART, the scenarios for this year are less harsh than they were last year, so we could see capital returns in the back half of the year. And then the Basel III endgame on pause, right? Bowman has said that, there needs to be a review of those capital requirements, so we could see some easy regulation.
Nadia, always good to catch up, get an update on your views. Thank you. Nadia Lovell there of UBS. The financials, the banks on the S&P 500 having the worst week of the year, but still up on the week by close to 10%. I think up around 8% on the S&P 500 for that particular group of stocks. Equity futures right now just about positive on the S&P with an update on stories elsewhere. With your Bloomberg brief is Yahara Hacker. Say, Yahara.
Hi, John. The U.S. Senate confirmed Kash Patel to lead the FBI. Patel has promised to overhaul the agency, which President Trump claims has been weaponized against him and other conservatives. Patel promised not to politicize the FBI and says his top priority is protecting the rights of the Constitution. Meanwhile, Citigroup is the latest company to abandon DEI goals. The bank is ending targets for increasing representation among women and ethnic minorities. Bloomberg obtaining a memo saying the bank is dropping the policy, citing pressure from the Trump administration. And ESPN and Major League Baseball are ending their decades-long broadcast relationship after the 2025 season. The decision came after Disney-owned ESPN made clear its intentions to reduce rights fees, which MLB deemed unacceptable. Both parties left the door open to negotiating a future deal. That's your Bloomberg brief. John?
Yahara, thank you. More from Yahara a little bit later this morning. Up next on the program, the morning calls, plus Dan Niles of Niles Investment Management ahead of NVIDIA earnings, due out in about a week's time from New York City. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Equity futures on the S&P 500 just positive by close to 0.1%. The opening bell 1 hour and about 15 minutes away. Time now for some morning calls. First up, Truist reiterating its buy rating on Walmart. The analyst recommending investors buy aggressively following yesterday's pullback. Not much of a bounce this morning. That stock is up by not even 0.1%. Your second call from Bank of America raising its price target on Alibaba, anticipating more growth in cloud intelligence revenues. That stock up this morning by close to 4%. And finally, Citi lowering its price target on Dow, saying bullish expectations are offset by near-term lumpiness and margin pressures. That stock positive still by 0.75%. Let's stick with tech. Investors looking ahead to NVIDIA earnings next week. Dan Nars of Nars Investment Management saying, well, I expect solid results. It is the forecast for the April quarter that I wonder about. Can a slowdown in sequential growth from US customers be offset by upside from international customers trying to leverage DeepSeek and get in front of sanctions and incremental spending by Stargate? Dan joins us now for more. Dan, welcome to the program, sir. We've got a solid 10 minutes with you, so a lot to talk about. So I want to begin with your calls coming into 24, not coming into 25, because you had a call very early on KWeb, which at the time was highly contrarian, going back into Chinese internet names, Dan, which have really picked up in 2025. Can we start a year ago, Dan? Why you liked that? Why you thought the mood was going to change?
Well, I mean, the big reason is I'm into very high return risk reward trades. So if you're looking at the Chinese internet companies, for good reason, they've been given up for dead for the last several years because you'd had the Chinese government really going in there and trying to suppress those companies, given they thought they were becoming too powerful, too outspoken. And then obviously the Chinese economy has slowed down massively. And now what you've seen is the government going in there and going, well, these are the companies that are driving employment, they're driving the growth, and they've finally gone ahead and start to support them. And so if you look at some of the biggest names there, you've got the market trading for those big tech companies at half the valuations of the US ones. And so that's why I was looking at those sectors. And typically China follows the US, it's always with the lag. And, you know, I'm sure we'll talk about DeepSeek, but DeepSeek has shown up roughly 2 years after ChatGPT showed up in the United States, and that's really, you know, driven a surge in a lot of those tech stocks over there. And that's quite honestly where we're really interested, because there's still a lot of uncertainty, fear, and doubt for good reason. But when you have a company like Alibaba, which is the biggest cloud vendor in Asia, come out and say, hey, we're going to spend more in CapEx over the next 3 years than we spent over the last 10 years, that's something you probably need to pay attention to.
Dan, do you think that China's success across several dimensions that you describe will be at the expense of US and US companies?
Well, let's not forget it's a global economy. So there is going to be some of that. You can't get around it, but it really depends on which companies you're talking about. If you're talking about chip vendors, you know, assuming there's no sanctions, which is obviously not the case, but you're going to have, whether it's Alibaba buying the chips or Microsoft buying the chips, you kind of don't care, assuming there's no restrictions on where those chips are going. So from that perspective, there's no difference. Also, don't forget, a lot of the big US companies aren't allowed in China. Google doesn't really operate there. Facebook doesn't really operate there. And so, you know, for them, it really doesn't make a lot of a difference. For a semiconductor company, that'll move things around in terms of where the chips are potentially going to in terms of where the demand is coming from. And so that's what it really comes down to.
Even so, there has been action very recently by the Chinese to take a closer look at what U.S. tech is there. The FT had a story that China was reconsidering giving Tesla a license for its autonomous driving, that it was investigating Google's practices and also seemingly launching one against Apple too. Dan, is there a political element of not only holding up their own tech players, but looking at more closely at American tech as America looks and adds more sanctions onto China?
Yeah, there's obviously a political football going on here. The good news is, because the Chinese never let in a lot of the U.S. tech companies into China in the first place, they don't really have a lot of negotiating leverage from that angle. Now, if you're talking about other things that we ship to China, obviously there's obviously excluding Tesla, Tesla ships a lot of cars into China. But if you look at the big tech players, there's not a lot of revenues that comes from that area, so they don't have a lot of leverage there. It's all the other stuff that we really care about. And then let's not forget, depending on how you want to view Taiwan, there's a lot of semiconductor manufacturing. You know, a lot of the iPhones are manufactured in that region of the world. That's where they can put more of a threat on the U.S. companies. But that they also risk hurting their own economy, which we all know hasn't been doing very well. And so that's the other side of that, which is what they're trying to balance.
Dan, one thing I keep playing over in my head, I'm trying to figure out whether there's any signal to be gleaned from this, and maybe you can help me out. That when we had the inauguration of President Donald Trump, lined up behind him was American tech executive after American tech executive. One person was notably absent, and that's Jensen Huang. Not only was he notably absent, he was notably in China at that very time. Is there any signal to be taken from that?
I mean, I don't know. I guess what I would tell you is that the first time around President Trump got elected, it was really only Tim Cook that embraced him from the start, the CEO of Apple. This time around, pretty much most of the tech CEOs have gone ahead and embraced him because they know it's important. So with Jensen not there, I mean, let's face it, NVIDIA is probably one of the most, if not the most important company we have right now, just given we're in this early ramp phase, or we're 2 years into the ramp phase for generative AI. Jensen's obviously incredibly smart, very important to the U.S. And so I think President Trump wants to put America first. That means being supportive of NVIDIA, but let's not forget, I fully expect some kind of give and take when it comes to these chips making their way into China, because DeepSeek, you know, yes, were some of the claims overstated? Absolutely, but it was a big improvement on the AI technology in the United States, and I'm sure some of the chips from the U.S. through other countries made their way into China, and obviously that's something that, you know, President Trump is very focused on. And so this is going to be a moving, you know, target as we go through the year, because this will obviously also get caught up in negotiations. But let's not forget, you know, necessity is the mother of invention, and to some degree, DeepSeek came about because we were trying to restrict a lot of the technology going into China, but that made them work that much harder on, well, we can't get the hardware, let's focus on the algorithms and the software. And they did make some pretty substantial improvements, which, by the way, are going to make it back into the U.S., just like a lot of the improvements we made in the U.S. made their way into China, which is what DeepSeek built on.
But Dan, just for some clarity, do you think actually DeepSeek did this with the lesser tech, or do you think they got their hands on some of that high tech that the U.S. was trying to keep out of their hands?
I mean, I believe they probably got their hands on some of this high tech stuff through other channels, but that doesn't take away from the fact they made some massive improvements on the way you process all this information to generate AI results. And so I think there's a little mix of both. I mean, all companies overstate what they are able to do and how they're doing it, and I don't think it's any different with DeepSeek.
When it comes to tariffs, you were talking about TSMC. Trump is threatening 25% on semiconductors. He also once was talking about how Taiwan should pay us for the defense because of the chips. Do you think TSMC is going to have to invest even more into the United States?
Well, don't forget that they've already started doing that. They have a massive plant in Arizona. There's obviously been talk about how are they going to have a ongoing relationship with Intel? Will they take over part of the fabs in the U.S.? Because Intel, obviously, as we know, has been massively struggling. And so there's going to be more involvement between Taiwan, specifically TSMC, and the U.S., because that's the ultimate threat China has. So if you play out the scenario, and I think China's been very clear about this, they consider Taiwan an integral part of China. President Xi Jinping has talked about he wants to reunify the country. Their ultimate threat is they say, well, we're not going to let TSMC put out chips to the U.S. Apple gets those chips from TSMC, NVIDIA. You can walk down the list. The major tech companies in the United States all need that. That's China's ultimate threat. If you look down the road a few years, they just say, well, you can't have any chips, at which point the U.S. tech industry's got a massive problem, more than anything tariffs or other restrictions China could do to the U.S.
Dan, got 40 seconds left. I wanted to squeeze in one final question just on Texas Instruments, a name that previously you had said you liked. Do you still like that name? And what do you think is behind the recent pickup in the last 6 days? 6 sessions up by close to 14%.
Well, that one's easy. If you look at Analog Devices, which is the closest comparable to Texas Instruments, after having numbers get cut for, you could argue, close to 2 years consistently and underperforming, you finally saw some signs of, hey, they beat the revenues, the EPS for the quarter, the forward numbers went up a little bit, and that's the first positive sign you've seen coming out of those end markets or companies that serve those end markets in a very long time, and that's why you've seen Texas Instruments stock pick up a lot, and that was driven by ADI recently.
It's a better story to tell, that's for sure. Dan, appreciate your time, sir. As always, it's good to see you. Dan Niles there of Niles Investment Management. A lot to unpack, but the K-Web story, the Chinese internet names really flying to start the year.
It is, and I think a lot of people missed it, because you mentioned this. It's this kind of mental block, because we've been burned before about China. So this idea that it was finally coming alive, that Jensen Huang was in China, a lot of people missed it.
And also the rhetoric has been so hot between Washington and Beijing. But then DeepSeek happened, and everyone was like, maybe we need to take more attention to what they're doing.
And we certainly paid more attention, that's for sure. Up next on the program, pay attention to this. Tiffany Welnig of PIMCO, Ed Al-Husseini of Columbia Threadneedle, as we round out the trading week from New York. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Equity futures on the S&P just about positive. The opening bell 60 minutes away. On the Nasdaq 100, we're positive here by 1/3 of 1% and some relative outperformance on the Russell, up by 0.5. With 60 minutes to go until the cash open, let's get you an update on the morning movers. Here's Yahara Hacker. So Yahara.
Hi, John. We started with United Health Group. That's taking a major hit here in the pre-market, down 11%. That's because the Wall Street Journal is reporting that the Justice Department is launching a fraud investigation into its Medicare billing practices. Citing sources familiar, the Journal is saying the investigation is looking at how the company records diagnoses that then trigger extra payments to its Medicare Advantage plans. So one to watch. Meanwhile, we have Dropbox. Those shares are falling some 6.5%. Yes, they beat on both the top and bottom lines, but its revenue growth and guidance came in light. And analysts here at Bloomberg Intelligence writing that the latest report doesn't provide many signs of an AI-led lift to the top line, a problem when you're a tech company, of course. And next up, we have Mercado Libre shares. Those are soaring 12% here. And as for those of you that don't know, this is a Latin American e-commerce company, and they smashed profit expectations. And net income came in at a record $639 million. Poonam Goyal here at Bloomberg Intelligence saying Mercado Libre is poised to capture rising interest in digital shopping and financial services across Latin America. John?
Yahara, thank you. Appreciate it. That name up by about 12% this morning. Let's turn back to the economy. Fed officials signal that rates will remain high for longer, with government policies bringing inflationary risks. Tiffany Wilding of PIMCO writing, all of these policies and negotiations are likely to coincide with some economic disruption and market volatility in the near term. How much volatility is tolerable is still the key question. Tiffany joins us now for more. Tiffany, welcome to the show. And in many ways, I'm asking where's the volatility, because equities are close to all-time highs on both sides of the Atlantic, and some people believe that maybe that just leaves the door open for the president to be even more aggressive with tariff threats. Of the things on the table, what are you and the team actually expecting?
Yeah, I think there's clearly a lot of uncertainty here because I definitely think inflation, as you mentioned, and market volatility will be a constraint to what the administration eventually does. But nevertheless, what they are saying they're trying to do is they want to rectify decades of trade imbalances that have, treated the United States, in particular the manufacturing sector in the United States, unfairly. In order to rectify those balances, they have to really get at some structural issues within the global economy, within these economies that, run surpluses, like China, Japan, South Korea, and Germany. And so these are not going to be things that are easily negotiated. And if they are changed, if the Trump administration is trying to force changes, certainly could result in some disruption. So, I think how much disruption is tolerable, is kind of the key question here. And when we look at market pricing, it does look like, there's a lot of sanguine kind of pricing when we look around. The markets don't seem to be, really reacting, to the potential for this type of disruption.
Tiffany, do you think the Fed will react? When they meet in March, they've got to put out some new forecasts. And we know that we've got certain tariff proposals on the table for March, including 25% on Canada and Mexico, 25% on steel and aluminum. And then in the following month, if we go into April, there's the reciprocal tariffs that people are looking for as well. How do you expect the forecast to change, if at all, at the Federal Reserve?
Yeah, I mean, I think this puts the Fed in a really tricky position, because these types of policies, they will result in or likely will result in a delay of the Fed meeting its 2% inflation goal. They'll result in one-time kind of price level adjustments as these tariffs are passed on to consumers. But at the same time, they could also result in some economic disruption. Growth can have a bit of a drag from this. Other policies that the Trump administration are implementing, like more aggressive immigration policies, some of the potential government spending cuts that are being discussed within these reconciliation bills, all of that will put downward pressure on growth. And so that's not, that kind of goes against the dual mandate. You have conflicting issues. I think in terms of the Fed, basically what they've signaled is that the economy is coming into this period relatively strong position. Inflation has been stickier than expected. That last mile has been more difficult. And with all of this uncertainty, they're kind of happy to sit and watch for now, at least, and to kind of see how this plays out.
Tiffany, could that lead to something that looks like a policy mistake? If history has told us that one of the impacts of tariffs is weaker growth, and you have a Fed that's still squarely focused on inflation, perhaps with recency bias, that they might not move or might not cut as much as they should when we know what some of the impacts of tariffs are. And as you say, it's not great for the economy.
Yeah, I mean, I certainly think that's possible. I still think that the Federal Reserve is squarely focused on the labor market. As we saw in the latter half of last year, with unexpected weakness in the labor market, really kicking off about 100 basis points of cuts and adjustment lower in the Fed funds rate. We really do think they are focused on that. So ultimately, maybe they're a little bit more delayed. But if the labor markets really deteriorate, we would expect the Fed to react in a strong way.
But Tiffany, what about the inflation side? We're going to get University of Michigan. We've already seen these surveys come out, and people are concerned about potentially higher prices, even if it's a one hit because of tariffs. How is the Fed going to react to that?
Yeah. I mean, ultimately, we agree. It's a tricky position for the Fed. I think ultimately, for now, the Fed is going to stay on hold and is going to watch how this plays out. Inflation, movement higher in inflation expectations would be something that the Fed would be, very much focused on, and ultimately could, delay or mute the extent to which, they cut the policy rate, even amid, a growth scare or some deceleration, on the activity side. So I think this is something, again, that they're going to continue to watch, and it sets up for a very tricky position for them.
Tiffany, what is our experience of tariff threats lingering for this long? If this just persists through the year, do we have any experience of that? What happens? How does the consumer behave? How do companies behave?
Yeah, well, here again, I think there's a little bit of, I hate to be a two-handed economist, but, you do have expectations that impact behavior, and that can go in both ways in terms of growth and inflation. So you certainly have evidence from the first Trump administration that increases in just policy uncertainty, economic or trade policy uncertainty, does hold back hiring, does hold back investment, as businesses are more unsure of what the rules of the game are. At the same time, though, you also see some, call it front-loading behavior. And we think we are absolutely seeing consumers do that now. So we've seen an increase in goods purchases. That drove the acceleration in consumption in the second half of last year. We calculate it contributed about 2 percentage points to the roughly 4 percentage point growth that we had in real consumption. And that's consumers, we think, just hurrying up their purchases of various goods, expecting some of these tariffs. So that is kind of a near-term boost to growth. Obviously, obviously that won't last forever, and eventually, we think the broader trade policy uncertainty, if it continues, will really start to hurt growth. And ultimately, I think the risk here, relative to where we see, consensus in terms of forecasts, 2% growth for 2025, I think the risk here is probably that growth comes in lower than that, as you look across these policies, that are being discussed and even implemented. Many of them, outside of maybe tax cuts, aren't great for the growth outlook, at least in the near term. And of course, when and if we do get tax cuts, that's more of a second half story and a 2026 story. So the near term risk, I think, is more of a loss of momentum in the U.S. economy here.
Tiffany, can I just finish by saying God bless you to you and the team at PIMCO for waking up so early on the West Coast. It's amazing what you and the team do. Tiffany Warning of PIMCO, 5:30 Eastern Time, Western Time rather, on the West Coast in Newport Beach, California. Those guys wake up so early, all of them, like 2, 3 a.m. on the West Coast.
Celsius drinkers.
I would say it's like kind of our wake-up time. You're going to send them some Celsius.
That's where the Celsius is getting consumed.
Yeah, for
no
sure.
doubt about it, at PIMCO HQ. With us now is Ed El-Husseini of Columbia Threadneedle. He joins us now for more. Ed, it's good to see you, sir.
Good morning.
Do you see reasons to be bullish fixed income here? Treasuries specifically?
I think the reasons are still pretty good, and they've been actually in place for the past 6 months. Not a lot has changed. The starting level of yield is still quite attractive, and risk assets are still quite rich. And we have an environment in which bonds are in a much better place to play that buffer role in a portfolio, and that really hasn't changed that much.
That risk mitigation. Yields have dropped over the past 4 or 5 weeks. What do you think is behind that pullback in 10-year yields?
I think we overshot a little bit. If you look at where we started in September of last year, we had overshot a little bit to the downside. There was a lot of fear around what was going on in the labor market. We've corrected that. The Fed's gone on hold, and we overshot to the upside into the end of last year. And now we're kind of in exactly the right zip code, right around that 4.5% level in the 10-year yield.
Well, we've seen not just yields come in, but in a really tight range, too. Front half, you can make the argument the Fed has kept it really well pinned. But we've gotten economic data that surprised. And in the past, in just the last year, you would have seen more volatility. What do you make about the lack of volatility in this bond market?
Yeah, absolutely. The volatility has been unusually warehoused in the FX market. When you look beyond the FX market in equities, in credit, things have been exceptionally well behaved. There's a fair amount of greed in those markets. The technicals are really good. There's a lot of money being put to work. There's just not enough of a catalyst to change the picture. Even though data has surprised a little bit to the upside, we did all of that work in the rate space in the fourth quarter of last year. Since then, the last couple of months, data's been really muddy, not enough to shift the Fed. The Fed's messaging has been quite consistent, and we've settled into a groove. And I think that's what's been driving volatility.
We have seen past times, though, where FX volatility just mechanically spills into the rest of this market. Are we anywhere near those types of danger zones?
Really hard to say. If anything, what's been happening is the risk markets are pulling FX volatility down, and you're starting to see high carry trades, long EMFX, short dollar trades come online, in part because, again, the dollar had richened a lot into the end of last year.
Isn't all this driven by the policy uncertainty in Washington?
I think it's all of this is driven by greed, fundamentally. Policy uncertainty comes next. Policy uncertainty is one of those things. The longer you marinate in it, the less relevant it becomes to price action.
So the market is becoming, to Jonathan's point earlier, someone's note, the Fed is numb, but maybe the market's just numb to all of what Trump is doing.
It's becoming more and more difficult to focus on a specific policy action that has the scale and the scope to shift our valuation of risk, to really shift our view of the future at the moment. So there's a lot more stasis today, interestingly, than there was 3 or 4 months ago when we were anticipating these big changes straight out of the gate.
We have seen a sentiment shift, though, in certain parts of the world. We talked about China earlier on this hour. In Europe as well, at the equity level, there's a big conversation about what's about to happen over in Europe. We'd love your thoughts on it. A little bit later this hour, we'll catch up with our correspondent over in Berlin about the German elections taking place on Sunday. Are you expecting some fundamental changes to spending in Europe and how that spending will be funded?
I mean, it's been an evergreen conversation for the better part of the past 15 years. The demand story in Europe has been chronically weak. We've arrived at this point where I think it's critical for that conversation to be accelerated, both in terms of rebalancing domestic demand away from an export-driven economy. And then defense. Defense has entered the conversation in a major way, particularly in the last couple of weeks. Can we expect a significant gear shift coming out of this election? No, Germany's not capable of moving that fast.
These are countries that have the ability, they have the fiscal space, they don't have the willingness. And the countries with the willingness don't have the ability. At the same time, in the US, we're set to see a big tax package go through. And at the end of last year, we were talking about the crowding out of other bond markets because of the amount of treasuries that would be issued. Do they have the fiscal space at the European level to do the kind of things that maybe they need to do?
The answer is yes, they do. They've been reluctant to use it. Again, this is a systematic issue in Europe. They've been reluctant to use that fiscal space going back to the financial crisis, the global financial crisis. So to the extent that they're under pressure right now to reevaluate that stance, the Mario Draghi report last year was a really important move in that direction. They have all the right ingredients. Whether they will cook them into something interesting is, in my mind, quite unlikely.
Just to put a bow on that, does that mean that you're not necessarily very bearish European bonds, that we won't get that level of spending, defense spending, et cetera, coming in?
I think if you look around the world, duration in the U.S. is a little bit more attractive. Rates are higher here on a currency-adjusted basis. And to the extent that there's a fiscal conversation happening globally, in China, in Europe, and in the U.S., the incremental impact on the deficit in the U.S. is actually quite small. We're talking about extending existing tax cuts rather than adding new spending, at least at this stage of the game. So I'm feeling a little bit more comfortable with duration in the U.S., but again, if you're diversifying, I think it's quite attractive.
Well, while we're talking about what markets are moving and which ones aren't, certainly one that has been moving is gold, hitting an all-time record. It's also coming when you look at China, dumping their treasury holdings by the most since 2009 in the most recent data. Is there a connection between the two of gold going higher, central banks buying, and again, some of the hesitancy, some of the range-boundness on the long end and U.S. duration?
I think the short answer is no. That rebalancing away in terms of demand for treasuries, moving away from foreigners to domestic buyers has been in place for, again, a better part of a decade. It's a continuation of the rebalancing of China's domestic economy. So to me, not that important. Central banks diversifying reserves into gold, perhaps a little bit more important, but it's not clear that they're diversifying away from treasuries. They're buying both gold and treasuries at the same time, right? And the dynamics of the gold market might be dictating that price action. But the extent to which these are all interconnected, I think that connection is quite loose.
Just to wrap it up, can you give us a number? What do you like on the 10-year? What do you think that's coming down to?
Look, when I think about where we'll end up over the next, let's say, 12, 18 months, in my mind, the Fed is underpriced at the moment. We have about 2 cuts in the price for the next 18 months or so. In my mind, pricing really skews in favor of them doing more rather than less as this year progresses. And so the 10-year, excuse me, the 10-year a little bit too high right now. I'd be shooting sub 4%, closer to 3.5.
Interesting. Ed, appreciate the update.
Thank you,
sir. Thank you. Ed Houssani there of Columbia Threadneedle. A little bit of data coming later in about an hour from now. You'll get some US PMIs. Then after that, the University of Michigan Consumer Sentiment Survey. So look out for that a little bit later this morning. Let's get you an update on stories elsewhere with your Bloomberg Brief. Here's Yahara Hackers. Hey, Yahara.
Hi, John. We start with Coinbase. Shares are rising here, up nearly 5% after the SEC agreed to drop its lawsuit, accusing the cryptocurrency trading platform of running an illegal exchange. The move marks the latest retreat from the policies of former SEC Chair Gary Gensler. The agreement is pending commissioner approval. Meanwhile, Coca-Cola is warning of potential negative impacts if it changes its DEI policies. The soft drink giant says policies that could lead to a less diverse global workforce pose a potential risk to its business going forward. Meanwhile, rival PepsiCo going in the other direction, joining a number of companies dropping its DEI program. And the first ever Four Nations hockey tournament ended in a thriller with Canada beating the U.S. 3-2 in overtime. Superstar Connor McDavid scored the winning goal for Canada after goalie Jordan Binnington saved 31 shots. Emotions in the arena were high amid tensions between the U.S. and Canada. After the game, Canada's Prime Minister Justin Trudeau posted on X, "You can't take our country and you can't take our game." That's your brief. John?
Fighting words from Trudeau there. Fighting words. Yara, thank you. Up next on the programme, setting you up for the day ahead. We'll look ahead to that economic data and a big election taking place this weekend. From New York City, this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but we can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
Go.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
That Governor Trudeau stuff really gets to him, doesn't it?
Oh, yeah.
It's getting to him.
Well, Trump called the U.S. team before the game, tried to amp them up. It didn't work.
I love a friendly rivalry in sports. I'm not sure how friendly that's becoming,
I
though.
think for Trudeau, he takes everything personally.
Yes.
Well, they also booed the Canadian anthem this time. The Americans got their revenge. They booed when they sang "Oh Canada."
Ice hockey is tough stuff. Equity futures right now in the S&P. I'm being very for real. Like, it really is tough stuff. In the bond market, yields are lower by about a basis point. We're down to 449.74. The opening bell is about 40 minutes away in the equity market. Let's look ahead to what you can look ahead to a little bit later this morning and through the weekend and into next week. Later this morning, US PMIs and new Mitch consumer sentiment. Later on this afternoon, President Donald Trump signing another round of executive orders. On Sunday, Germany's snap election. On Tuesday, looking ahead to some earnings for you. Home Depot, plus some more Fed speak. On Wednesday is the big one. Nvidia earnings a week away. Look out for that. As we look ahead to the election on Sunday over in Germany, let's catch up with our good friend and colleague, Ollie Crook, over in Berlin. Ollie, just set it up for us. Frame it. How big is this Sunday going to be?
Yeah, listen, John, I mean, this is really a story that began on November the 5th when Olaf Scholz pulled the plug on his government the same day that Donald Trump was elected president of the United States. And that has been really in the background of all of this conversation, this entire campaign trail, which is a very sort of unique one for the German political establishment over the last few decades. It's unique because it is also in the sort of protagonist seat here, the AfD, the right-wing group, with 20% of the vote, the number two. They have really set the agenda in many ways on a lot of the topics that have been going into this election. The expectation for Sunday is still, because the polls have basically not moved since November, the expectation is for the CDU, Merkel's traditional party, now led by Friedrich Merz, to lead in government with 30%. The question is, how fractured, how fragmented will the political establishment be this time around? This was part of the problem in the last mandate that they had with Olaf Scholz, where you had a basically three-party situation here in the governing that was very, very awkward and ultimately could not get a budget through. So that is what we're going to look for on Sunday, 6 p.m. local time. We get the exit polls by 7 p.m. We'll have an idea of what the composition of the parliament's going to be. However, that may just be the beginning of the coalition negotiations that could take months into actually getting a government in Germany.
The traffic light coalition, Oliver, they couldn't get a lot through. What could they actually get through if they're being led by the CDU?
Listen, what I think is very interesting about this situation, if Friedrich Merz gets a strong mandate, he's able to put a government together with just one other party. That is not a guarantee of that, but if he's able to do that, there are a lot of ingredients in front of Friedrich Merz in order to be able to make some big changes in Germany, but also at the European level. We've talked about this before. Yes, there's a vacancy in the Chancellery. That's the building right behind me. That's the job he's going for. There is a vacancy at the European level in the top leadership, dealing with Donald Trump, dealing with China. There is a sort of void within the EU. If the CDU is able to sort of gain a sort of a strong mandate and willing to go to Brussels and talk about big changes, talk about maybe something like joint debt, talk about basically reforming the European project in the face of what is a huge amount of challenge from Donald Trump, Germany will have a huge amount of power in sort of governing what the future of Europe looks like. Whether or not Friedrich Merz is the man for that, or he's going to be able to do it with the domestic crowd in Germany, is another question, but the opportunity is there.
Ollie, appreciate it. As always, it's good to hear from you. Looking forward to the coverage led by Ollie Krug over the weekend. Look out for that on Sunday out of Berlin. The German economic model is failing. Some might say it has failed. They've got their own challenges domestically, but on top of that, alongside it, the immigration issues taking place in that country. And a lot of these difficulties are seen across the whole of the continent in Europe right now. But the timing for this election is all the more striking because it comes at a time where the US administration is putting more pressure on the Europeans to do things for themselves.
And it was a great moment you had yesterday with Scott Bessent, the Treasury Secretary. You said, have you communicated your frustrations to Europe? And he said, do I really need to? I think J.D. Vance, our vice president, did that for us. It almost comes at a brutal time for Germany. The Americans are going to put the tariffs up, and they're pushing for them to do more. And to Oliver's point, unless the CDU gets a pretty big majority, it's going to be very challenging for them to get any policy through that government.
The German finance ministry has celebrated the so-called black zero for a long, long time. Balanced budgets. That's been at the expense of the US taxpayer, who's been filling the hole, spending all this money on defense stateside at a time where Europeans haven't kept the course and done what they needed to do and up spending. And this is where the pressure starts to build in a much bigger way for the second time from a second Trump administration. Coming up on Monday, reaction to that with Bob Dole of Crossmark, Holger Schmieding of Berenberg, Henrietta Trays of Vader Partners, and the former Biden administration official, Amos Hochstein. From New York City this morning, good morning to you all. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. Then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah. But with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of no. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
All right, we're looking at futures that are higher and Treasury yields that may end this week up for the first time since Donald Trump took office. 30 minutes until the start of trading. I'm Matt Miller.
I'm Sonali Basak.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, talk of a Mar-a-Lago Accord is buzzing on Wall Street. Market veteran Jim Bianco warning clients to brace for more radical moves from President Trump.
Meanwhile, more earnings roll in, strong travel demand powered an earnings beat at Booking.com. The CEO, Glenn Fogel, joins us this hour.
And shares of United Health plunging following a report that the Justice Department is investigating the insurer's billing practices. We'll take a look at that 13% plunge in a little bit, but let's take a look at these broader markets right now. The S&P 500 barely higher. We're actually just about unchanged for the week, so we'll see where we go. We've hit 2 fresh record highs this week, but that's a distant memory after the plunge that we saw yesterday. The NASDAQ 100, your big tech names, faring a little bit better in the pre-market session right now, with the NASDAQ 100 higher by about 0.4%. The bond market just about unchanged. You take a look at that 10-year Treasury yield, just camped out right below 4.5% right now. But Matt, as you mentioned, for the week, maybe we'll actually see a little bit of a lift.
It could be the first week of that. Speaking of treasuries, a lot of people, or at least we, have been talking about a pretty fascinating idea, I think, that would attempt to switch out or swap foreign treasury holdings for longer-term debt. This is a look at Debt Go on the Bloomberg terminal. Type DEBT Go in your terminal. You can see who holds our debt. I think it's kind of funny that the Federal Reserve holds more than 47% of all of our debt. But Belgium is seen as a proxy for Chinese debt holdings, and you can see that Belgium holds a pretty big sliver itself. Just an interesting function to look at as we consider the idea.
I know you like to be the cool guy, but it makes me so happy when you get nerdy at 9 a.m.
Oh, no.
Oh, no. We're going to talk more about debt. First, we're going to talk about stocks. Rivian down about 8.5% pre-market. They reported its first ever quarterly gross profit. They expect to deliver up to 51,000 cars this year. That could change, though, based on EV policy shifts in Washington. That's what has investors nervous. Also watching Celsius this morning, just surging up 33%, even more than that pre-market. They're going to be buying Arrival and energy drinks here, Alani Nu, for $1.8 billion because growth has been slowing. We're also watching United Health, as Katie was talking about. It is down after a report that the Justice Department is investigating its billing practices, including how it records diagnoses that trigger extra payments to Medicare Advantage plans. United Health now down 12.6% pre-market, Matt.
These two things actually tie in nicely, Shonali, because drinking Celsius, I don't think that can't really be good for you. It doesn't. I'm looking at her can of Celsius.
That feels like a little bit of a stretch.
It doesn't look healthy. If
No.
you drink that too much, you're going to need the services of United Health Group. The question is, will they approve?
That could be wild
Will they
speculation.
approve
And
your
speaking
billing?
of wild speculation, should we talk about the Mar-a-Lago Accord? It's making the rounds today. It's one of the most read stories on Bloomberg News. Basically the brainchild, maybe, of Jim Bianco. At least that seems what this latest round has been reignited by. He had an hour-long webinar with his clients talking about the idea, of course, that, like you said, foreign creditors could swap their treasuries for ultra-long-term bonds to help ease some of our debt burden.
First of all, I'm going to drink my Celsius happily. So I
We're
go
not
for a run
sponsored.
after,
We should say that.
After the show today is why. I know you had a pint of ice cream last night, probably.
It's not untrue.
But back to the Mar-a-Lago Accord, to the point that you're making here, Katie, it's interesting. This has been kind of slowly brewing kind of in the corners of the financial market for months. What interests me just as much is if you look at the data this year on long-term debt, you actually have a lot of debt maturing from, say, 2015, 2020, that will come into the market this year that will kind of make it tough to not issue more T-bills when the 10-year is still at 4.5% roughly.
I don't think the Mar-a-Lago Accord idea is that crazy. And it's Jim Bianco, Stephen Mirren. It all comes from Zoltan Pozar, who's saying that we need to divide the global pie of costs for defense more equitably. And one way to do that may be swapping out some treasuries held by foreign owners for 100-year, non-tradable, zero-coupon debt.
I will say that Bianco himself said that the Mar-a-Lago Accord is not actually a thing. It's a concept.
Yes.
So let's not get too ahead of ourselves. And I was a currency reporter for the first Trump administration. We talked our ears off, basically, about the idea of a Plaza Accord 2.0. It never happens.
I think the moral of the story here is anything can happen, but more often less happens than we think.
That's true. Should we talk to a guest about it?
Yeah, let's bring in Alpha Simplex Chief Research Strategist Katie Kaminsky. And you know, this is all very interesting because the dollar is so fundamental to the investing that you do. U.S. Treasuries are so fundamental to the investing that everybody around the globe does. What do you think of the idea of, you know, restructuring global debt holdings?
Well, I think restructuring global debt ownings is always a way to kind of change the dynamics, especially over different time horizons. I think I kind of agree with Katie that, you know, this is something that's still sort of an idea. So I think from our perspective, we look more at where prices have been moving. And when we look at them right now, you really haven't seen that much movement in fixed income. I've actually been kind of questioning why we've seen things like higher CPI, but we're not seeing higher long-term rates yet. So I think it's still very preliminary.
It's a good look. We haven't seen volatility in the bond market this year.
I know.
And there's so many reasons we would,
I know.
right? We saw so much volatility last year before Trump started putting negotiating tariffs on. And
we were talking about the MOVE index yesterday. It's near its lowest levels of the year, Shonali. And the 10-year Treasury yield, I mean, we have this mono focus on it, but it's been in a range for weeks now.
And there's one reason why the BI analysis shows that a lot of that is tied to the correlation to Fed policy. But Katie, you were talking about the long-term, you know, the 10-year here. Where is it headed to the end of the year? What's the new target to consider of whether it's higher or lower at this point?
So generally, technical signals have suggested that yields should stay higher, and that is very consistent with fundamentals. So if you think how the Fed has been very clear that they don't have room to move right now and they're fine where they are, But you also have the situation that inflation numbers have ticked up some. So from our perspective, long-term views suggest that yields should go higher. But in the short term, there's been a lot of concern about how strong this U.S. exceptionalism theme really is, and if there's potential for weakness, some of this short-term pain for longer-term gain discussions. So I think that's what you've seen, is that yields have been in limbo, kind of pegged to 4.5 or below, because those two narratives are kind of at odds. So I think longer term, I see higher based on inflation, but the market is nervous this month, so that's definitely hasn't happened.
Yeah, and the idea of U.S. exceptionalism, something we've been talking about all week, is the fact that Europe is outperforming year to date. There's a lot of optimism building over Chinese equities in particular, especially those Chinese tech equities. But talk to us about the relationship between the long end, which you see potentially going higher here, and what that means for the equity market. It seems like that's a hot and cold sort of dynamic.
Well, it's tricky because longer-term rates being higher would kind of imply that we expect some inflation baked into current policies. I think the challenge is that the market still doesn't really know what the change, how extreme the change in policy is going to be, and how inflationary it is going to be over a longer time horizon. So I think if you do believe that inflation could be a long-term issue, then, of course, long-term bonds and the long-term premium needs to steepen out. But that's really been at odds with shorter-term discussions right now. And that's where sort of that U.S. exceptionalism theme, people are trying to kind of figure out, is that losing some steam?
Dr. Kaminsky, we had a great interview with Scott Bessent yesterday on Bloomberg Surveillance, where he basically said he's hopeful that cutting the deficit and keeping the tax cuts, these tariffs and maybe even deportations is going to help lower the 10-year yield. How much faith do you have in this administration, in their ability to lower the 10-year yield?
Well, I think the good point of that is there's a bunch of ifs in that statement, right? And so, if we can reduce this and if we can do this, then we can lower the 10-year yield. But I think the challenge is going to be, as long as we have inflation, you're going to need rates to be higher. So if we were able to cut the budget so that we could actually reduce the debt load and not induce inflation by these policies, then I would agree. But I think a lot of people are just concerned that it may not be that easy to reduce energy burden. It may take time to do this. So the shorter term effects might be short-term inflation, which could be counterproductive for interest rates.
All right, Katie, always great to speak to another Katie. That is Alpha Simplex Chief Research Strategist, Katie Kaminsky. Meanwhile, we want to bring you some breaking news, and that is that U.S. prosecutors and regulators are investigating a $32 million deal between CrowdStrike and Carasoft to provide cybersecurity tools to the IRS. CrowdStrike falling a little bit on the news, down about 1.4%. We'll continue to track that one. But let's take a look at some other morning movers. About 20 minutes ago, until the markets officially opened, we were talking about earnings today because Block is down after a gross profit outlook miss. You can see that's wiping out shares, down about 11% right now. Also keeping an eye on crypto because Coinbase has said that the SEC has agreed to drop its lawsuit that is pending commissioner approval. But nonetheless, you can see that shares riding higher right now, up about 4.6%. And finally, taking a look at Alibaba. I mentioned Chinese tech, and Alibaba definitely driving tech gains today across the board. Now, coming up, Booking Holdings has a strong end to 2024, but is cautious about the start to 2025. We'll speak to CEO Glenn Fogel next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Up-to-the-minute global financial news whenever and wherever it happens. I'm Jonathan Ferro.
And I'm Lisa Abramowitz in Davos, Switzerland, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Let's get now to high interest and look at what's making headlines around the world. Ukrainian and U.S. negotiators are trying to move past the breakdown in transatlantic relations to finalize a deal on critical minerals. Earlier this week, President Trump called Ukrainian President Volodymyr Zelensky a dictator who needed to move quickly on a peace deal. In response, Zelensky said that Trump lived in a disinformation bubble. Actually, I'm pretty sure that went the other way. Zelensky said disinformation bubble, then Trump said dictator. In any case, the two are not really excited to talk to each other, but hopefully they can get together on something. Citi is the latest firm to abandon its DEI goals. The bank is ending targets for increasing representation among women and ethnic minorities. Citi cites pressure from the Trump administration for the move. The bank is a major federal contractor and is vulnerable to the administration's scrutiny. And that breaking story, again, U.S. prosecutors and regulators are investing a $32 million deal between CrowdStrike and Carahsoft, a technology distributor. Documents and sources reveal that investigators have been interviewing people and collecting records related to the deal. The deal concerned the provision of cybersecurity tools to the Internal Revenue Service. So more, I guess, on that CrowdStrike story for you, Katie.
All right, and we're also keeping an eye on Booking Holdings today. It reported earnings, and the stock is up pre-market after it posted a strong fourth quarter. It did, however, forecast a weaker start to 2025 due to currency headwinds, certainly something that we've been hearing a lot of this earnings season. Let's break it down now with Glenn Fogel. He is the CEO of Booking Holdings. Great to have you back with us, Glenn. Let's start with the broad picture here, because you mentioned on the earnings call that you're seeing healthy demand for leisure travel in specifics, but I'm wondering if you could break it down in terms of where people are actually traveling, which regions are really showing the most strength right now.
Yeah, well, thank you for having me. We talked about last night what a wonderful fourth quarter we had. And we did point out, actually, the strength was across the board globally. We're an extremely global company, and we were really excited to see that all parts of the world are actually increasing in travel. So there's no area that I'd point out more one than the other. I mean, we did break down a little bit in seeing in the fourth quarter, our slowest growing area was actually still rather fast, which was the US, which was a double-digit number, 10% increase. The fastest area was a thing we call the rest of world, which was going 20%. And so what's rest of world? Well, the other two areas besides rest of world and US are Asia, which was a mid-teens growth rate, and Europe, which was a low double-digit growth rate. So all across the board, wonderful numbers, great thing to come in and give our shareholders a nice little earnings discussion.
Here in the U.S., Glenn, a lot of people are worried about the consumer picture and whether inflation or other forces are going to bite more into consumer wallets. What evidence do you have that you can continue to see strength from the consumer going into the travel categories more often into this year with concerns about where inflation is headed?
Yeah. So, we've been dealing with this for a number of years now, where coming out of the pandemic, prices were very high for travel, and people were getting a bit of sticker shock, but they wanted to travel, and those numbers coming out of the pandemic were fantastic. Yes, today people will still say, hey, it seems expensive, but people want travel. They want to go and see the world. So sometimes what they'll do is they'll sacrifice something else instead. I'm not that concerned about people saying, I'm not going to travel because the prices are too high. In fact, our numbers, and we talked about last night, we're very positive about how travel is going right now.
I went with my wife to Singapore last month, and we used ChatGPT quite a bit to help us find and schedule, places to visit. How are your customers going to be using artificial intelligence on your platforms?
Yeah, no, it's one of the most exciting things right now are these new types of technologies like ChatGPT, which is operated by OpenAI. And you may have heard we made an announcement. We're one of the founding partners with OpenAI in their new thing called Operator, which is another way to use a large language model and be able to come up with ways to go and travel. We have our own things in our own site. We have a thing at booking.com that's called our AI Trip Planner. And over at Priceline, we have a thing called Penny, which is also another similar type large language model that helps people discover and then be able to book. It's absolutely crucial that we continue to work on developing these new technologies so that as people want to change over time from the way they used to plan, discover, and book, that we're where the customer wants to be. I'm very positive on how we're doing this, and one of the great things is, a critical thing is data. As the biggest travel player in the world, we have such an amount of resources in terms of knowledge, and that comes from the data. It's the tremendous number of AI experts we have, all the things that we can put together to make sure you, as a traveler, have the best way to come up with what is the highest value and where you want to go.
Well, Glenn, let's build on that because I didn't go to Singapore, but I went to New Orleans with my husband, and we also—
It's pretty awesome.
It was a lot of fun. We also used ChatGPT to find a lot of recommendations, and my question for you is, you are developing these tools, but how do you compete? Because it feels like people are kind of developing the muscle memory of just asking ChatGPT things.
So it's interesting about that, where, yes, some people are exploring ChatGPT and such, and we are working with them, et cetera, but it's still a very small number, and our job is to make sure that people, when they're booking, don't forget, we get paid when people book, and that is for them to be using all of our systems and services. And one of the critical things for a consumer is trust. And sure, you may be using ChatGPT, or maybe you're using Google or Bing or any way to learn and discover, et cetera. In the day, though, you want to have something that's going to be a one-stop shop that puts together what are truly the best value for you. And God forbid, anything goes wrong, you want somebody to be able to fix it right away. That's really what we're doing, and AI is a great way for us to bring it all together in a much better, seamless, frictionless way that enables you to feel more comfortable and more confident that you're going with something that's going to give you the most value. And look at our numbers right now, they're great.
I'm also curious here about how it's going to impact your bottom line at the end of the day. You have a lot of businesses here where obviously internet is first point of contact, but what does AI mean in terms of your workforce moving forward, your need to employ more people in order to get this information to customers? Do you think it's going to make a difference?
Well, certainly we're looking for efficiencies. And one of the areas, for example, is customer service. And we're seeing benefits already where a customer service agent at the end of the conversation with a customer has to put together a summary. Well, with AI, that summary can be done automatically, giving more time to the customer service person to actually spend time with the customer. But then it goes beyond that. And someday we're going to be able to do, and we're seeing some initial things where you don't need as a customer to deal with an agent. You can do it all with what is essentially a generative AI agent that's solving the problem right there. That, of course, enables us to spend our money somewhere else, and that may be in getting more AI specialists to help build better products and services. I agree. There are going to be changes in terms of where the jobs are because generative AI is going to be either a supplement or a replacement for certain things that are currently done completely by humans. But over time, I'm not concerned about there not being enough employment. I don't see that ever being an issue.
Glenn, great to get your thoughts on this changing industry at Booking Holdings. Glenn Fogel there, the CEO. Coming up in the next hour, we're going to have another C-suite conversation with Mark McLean. He is the CEO and founder of SailPoint, a software solutions provider that manages and secures real-time access to applications.
This is Bloomberg.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to Open Interest. You're taking a look at some pretty boring equity markets, at least on the benchmark level when you take a look at the S&P 500. So let's get to some good stuff. Some breaking news from the FDA saying that Novo Nordisk can now meet the demand for Ozempic and Wegovy nationwide. As such, the shortage has officially ended. You can see the reaction in the shares right now. Novo up about 5%. Take a look at Hims and Hers, though. This is really interesting. This ruling means that compounding pharmacies no longer have permission to make exact copies of Novo's brand name drugs, as they did during the shortage. That is bad news for Hims. That has turned into a big business for them, and you can see a big reaction right now, down about 17% pre-market. This is also a company, though, that is higher by about 178% year-to-date, 175% year-to-date on a total return basis, so definitely a lot of room to fall here.
I didn't realize the knockoffs became a billion-dollar industry.
Oh, yeah.
Oh, for sure.
Yeah, it's been
I mean, the chart on Hims is just parabolic. It's like Al Gore's hockey stick in the climate documentary that neither one of you saw. Coming up, less than 4 minutes to the opening bell, we'll discuss the market moves with Ann Berry of Threadneedle Ventures. This is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because, we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but it's producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
We are moments away from the start of trading, 22 seconds to be exact, until the opening bell, and we're looking at kind of a mixed picture in terms of futures. S&P futures are down as the indexes closed lower yesterday, although we did make a record high on Wednesday. I think it's interesting to look at the gain in NASDAQ and Russell 2000 futures, especially the tech stocks are being driven higher by hopes for more AI gains. Alibaba, the Chinese company that trades here, though, really boosting those hopes in earnings last night. You hear the opening bell, the Downtown Alliance ringing the bell at the New York Stock Exchange. Have no idea what that is. But Universal Logistics, which is a trucking company, one of the dudes there has an awesome beard. Shout out to that beard. And the stock had tripled over the last 5 years until it came plummeting down over the past couple of months and now is only up 62%, which is better than a stick in the eye. Speaking of, Katie Greifeld, what do you see in terms of the major averages?
You know, Matt Miller, you used to have an awesome beard, but I see you've been leaning more towards the mustache. I have mixed feelings about that, but we can talk after we get through this opening. There's not too much to talk about, though. The S&P 500 down about 0.1%. We're just about flat on the week with this small move. We might be biased towards a negative reading for the weekly gain, but we'll have to keep an eye on that one. Big tech, as Matt mentioned, that has been the outperformer. You have a lot of optimism building over Chinese tech, that rally becoming impossible to ignore. That's been lifting some of these U.S. tech giants, but some of that momentum fading right now in the first minute or so of trading. And then you take a look at the small caps. The small caps have been all over the place following the bond market, but at least for right now, the Russell 2000 is your leader, up about 0.9%. Meanwhile, let's take a look under the hood. We've been following this story. United Health down after the Wall Street Journal reported that the Justice Department is investigating its billing practices. United Health just sent an emailed statement which calls that report misinformation. Now, according to the article, attorneys are looking into how United Health reports diagnoses that trigger extra payments to its Medicare Advantage plans. You can see the shares currently off by about almost 11%, Shonali, if you round up.
Yeah, seriously dropping this morning. Not dropping, though. Celsius, it is up almost 30% at the market open. It's going to be buying energy drink rival Alani Nu for $1.8 billion in cash and stock. The deal comes as Celsius's revenue growth has slowed, including year-over-year declines in the past 2 quarters. This was a stock that took a big beating last year, but has now turned into positive territory, at least this year.
All right, and I'm focused on Rivian, warning investors that Washington policies with EVs, the changes to those policies, could impact sales this year. And yes, it makes some very expensive vehicles that don't get the tax credit, but it was hoping to make a cheaper vehicle that would. The company reported its first ever quarterly profit growth. It anticipates modest growth for 2025 with the emphasis on modest. I think they want to make a maximum of like 56,000 vehicles this year after making 49,000 last year, which is still kind of child's play.
Yeah, it's not very much compared to some of the more traditional.
But they look awesome.
They do look pretty cool, and I see a lot of them on the road for how few that they're making.
Have you driven one?
I have driven a Rivian.
And?
I don't like the fact that when you take your foot off the gas pedal, the car stops.
Okay, you can change that.
I know, but it's not my car, so I can't.
Oh, right, okay.
Yeah, anyway, I don't own a Rivian. Let's broaden out this conversation, because sitting next to me, we have Threadneedle Ventures founder Ann Berry joining us on set on this Friday. Ann, it's great to see you in person.
Thanks for having me.
We love having you because you get specific.
Yeah.
And you're always here when there's big news, it feels like.
I feel that way, yeah.
The big news, one of the big single stock stories this week is Walmart. Of course, shares falling about 6.5% yesterday. That was its worst one-day decline since November 2023. You saw some sell-side notes come out and say, maybe this is a dip worth buying, and Ann, I know you did that.
Yeah, I totally bought into this. I love Walmart, and here's why I think this is the moment to go in. The world that Walmart described is a world that's probably going to have tariffs, is probably going to have a consumer feeling a tighter squeeze, and that's the world in which Walmart does really well and takes share. 2/3 of what Walmart sells actually comes from the US. It's gained enormous traction with the high-income consumer. So I think if what it predicts is going to cause its growth slowdown is ultimately a world in which it gains share relative to other retailers as well. So I like that.
Normally, I'd want to harp on the consumer for a long time. It's my favorite story, as you know, in the market.
I would also harp on U.S. production. I mean, even the stuff that comes from the U.S. is probably just assembled here with parts that come from overseas.
Nerdy Matt is my favorite Matt.
Okay. Nerds are my mortal enemy.
I know this. I know, which is why I love calling you one. Anyways, Palantir. The reason I want to talk about it, it's been such a big contributor to the NASDAQ 100. It has been down 2 days in a row to the tune of 15%, rebounding today. This defense story.
Yeah.
They wouldn't be the only potential loser, though we've been talking about it's hard to see Alex Karp losing out, even if the Defense Department were spending less.
Peter Thiel has a closeness to this administration.
Very close. What do you think it all means at the end of the day for a stock that has run up so much?
Well, I want to start with this idea that being close to the administration equals some benefit. Let's take Tesla as a case in point. There is no one closer to this administration than Elon Musk, and yet Tesla and the EV sector taking a hammering around what could be happening from a policy perspective. So I would kind of separate
And yet Elon Musk's
out.
wealth has grown considerably since the November 5th elections.
As a result of a lot of his other investments, yes, right, including perhaps X going back to its original basis, its cost basis. But when it comes to Palantir, I remember being on this show, actually, right after the election results, and you looked at me and said, Anne, what do you think of the Trump trade? And I remember saying, I think the definition of the Trump trade could be turned on its head because of the existence of Doge, because things like defense that would traditionally be seen to be advantaged by having a more hawkish administration, on the flip side of this, this cost-cutting focus could actually be really detrimental. And I think Palantir is now the canary in the coal mine from a market perspective, and the market is saying the Doge effect potentially is going to overcome a fundamental policy effect and a hawkishness in this administration.
It's interesting. I'm looking at Tesla since the election as well. It's up 40%.
That's not a bad return on investment.
You
What, 4 months?
How much Palantir's up since then?
How much?
170 or 160%.
So there you go. I
Canary
will
in the
note
coal mine.
that Tesla is down 12% year to date. To just illustrate how fickle this seems to be.
And take a look at their sales too. Look at their sales in Europe. So I don't think yet that we've seen the full impact on Tesla. And I think these are the kinds of stock. It's almost become a meme stock, right? There's a separation between the fundamentals.
Yes,
and
I mean, it's been a meme stock for a decade, right? Tesla.
Some would have said that Amazon, therefore, was a meme stock for a decade. But actually, I think there's a different long-term play. But I think it's become one now, yeah.
What fundamentally do you think are the soundest investments out there? Is there a stock where you get up in the morning and you're so pumped about it, you can't wait to sing from the mountaintops?
I hope there is never a stock that I wake up so pumped in the market.
Shanali went to bed thinking about the 10-year yield. I'm not kidding.
I really did, and he didn't let me write that into my newsletter this morning.
Good.
Yeah,
that's good. Okay, wait. Well, we shouldn't be living our lives around. Look, Walmart is one of them, but I think there's a couple of others. When I think about the financials, at the moment, I think someone like a JP Morgan is really well positioned. I think these enormous balance sheets, I think with an interest rates still where they are, with relatively stable GDP growth, with international presence, I look at something like a JP Morgan and say, I think this is going to be, a long-term stable play. I also happen to be a massive fan of Jamie Dimon, so like like fangirling a little bit here with this.
Okay, JP Morgan year to date, guys. I mean, it's interesting, up another 11%. This is a stock that hit a record high. What gets you there? Is it just the love of M&A IPOs? Because January was actually a really weak month for both. And IPOs have not come back. In fact, we've been talking about it all week. Many have been slumping after they've gotten out the door. So what brings it there? Could it just be deregulation or lighter regulation alone?
I think there's a little bit of that, but there's also one thing that I think is interesting as a broader asset class. We are going to see a lot of corporates hit maturity walls. If you think about the credit issuance that happened prior to COVID, this is one of the reasons I think private credit has been such an interesting and compelling area for investment. The big banks with the big balance sheets, particularly in a regulated world, lending out at a higher interest rate before over the next 2 years, I think could be really interesting.
That is really interesting. So seeing more opportunity potentially on the private side. I mean, when you're putting together your portfolio, what does the division look like between public and private at this juncture?
Right now, my activity is heavily skewing towards private. I've said this now for a while. I think the public markets are extremely expensive.
Right.
Risk premium negative in some cases. The private market's offering a couple of interesting moments. A lot of companies that raised capital in 2020-21 are now having to go out again. And I'm seeing a breakdown in some valuations for some businesses that are fundamentally pretty good, where there's opportunity to go in.
Do you think we could see a correction? We're looking at the NASDAQ 100 now turn negative on the day. It's one day, but it just shows we've been sitting here watching the market really try to break into the green most days this week.
Yeah, but you hope we could see a correction, I'm sure, right? I mean, if you think it's overvalued and you want to get in.
Yes, I hope, and I think we are overdue a correction. Yeah. If we look now at what's going on what are the catalysts for there to be continued growth, right? Maybe it's rates coming down, but guess what? That's belated. That's been priced in for a long time. Is it GDP growth kicking up another notch because of tax cuts or deregulation? I don't know. Not on the flip side, if you take Palantir as the example where some of these, there's unintended consequences. So I don't see what the catalyst is for a further boost. The one thing I can think of is if the international markets can get it together, if Europe gets stronger again, if Asia gets stronger again, and that fuels holistic global growth, maybe. I don't see it right now.
All right, Anne, it's great having you. We could go on. We should have beers after. This is a conversation we could
Celsius, coffee, it's still
if you want.
9:30 a.m.
I feel like beers are pretty healthy. Anne Barry there. Thanks so much for joining us. Coming up, United Health defends its billing practices on news it's facing a DOJ investigation. The shares are down 9%. This is Bloomberg.
a number of people, I think, from Homeland Security and or the CIA or NSA have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Welcome back to Bloomberg Open Interest. A look at stocks. We are 14 minutes into the session, and you can see that losses deepening when it comes to the S&P 500. We're probably now in negative territory for the week, with the S&P 500 down about 0.2%. That enthusiasm that we were talking about in tech fading as well, with the NASDAQ 100 turning negative as well. And then you take a look at the Russell 2000, those small caps trying to hold on to gains. We were higher by about 0.8% just 14 minutes ago. Now down to about 0.1% gain. We'll keep an eye on that one. But it's time now for our top calls. Some of the analyst action in focus this morning. And first up, we have Blue Owl, no longer a sell over at KPW after reporting a solid Q4. The firm says that it's more confident that Blue Owl can trade in line with sector valuations. That's worth a 1% gain. Next up, we have Cantor Fitzgerald downgrading Rivian, saying it's no longer a buy after a disappointing fourth quarter. The firm attributes the downgrade to lower vehicle deliveries, the impact of potential tariffs, and the uncertainty of EV tax credit. Shares down about 5%. And finally, we have Akamai Technologies, no longer a buy over at Piper Sandler after the software company gave a weak outlook. The firm says that the results show, quote, messiness ahead and low growth. Akamai now the biggest loser in the S&P 500 today. Matt Miller.
All right, down 13%. Of course, we're also looking at big losses for United Health, the second biggest loser, I think, right now, after news that the Department of Justice is going to probe the company on payments or payments not made. The company calling the headlines misinformation and reverberating through health care stocks regardless across the board. Bloomberg's Danny Berger is here with more. This can't have been unexpected, right? I mean, ever since the murder of the United Healthcare CEO, there has been a lot of talk about which claims are approved and how many are not, and the fact that the government, especially a populist government, looks into this has to follow.
Well, I'd say especially this case specifically, Matt, because the Wall Street Journal for some time has been running kind of this investigative series about United Health and these practices. This is more about what they're telling the government they're getting in terms of certain diagnoses. This is a Medicare Advantage plan. The idea of it is half the people who are on Medicare do it through private Medicare Advantage. They send all their data to the government and say, hey, here are all the diagnoses we've had under this plan. Please send us money accordingly. So if they have more diagnoses of a certain kind, they will get more money from the government. The Wall Street Journal, again, had this investigation saying nurses, software, a variety of things were basically over-diagnosing people. So then United Health could turn to the government and say, you owe us more money, for diagnoses which maybe shouldn't have been there. To your point, Matt, United Health saying to Bloomberg, it's misinformation. That story from the Wall Street Journal, rather, which we have also matched ourselves, and saying it's not aware of any new activity in this regard.
Now, I also want to pull up some of the criticism that is percolating around what is happening right now. Bill Ackman, in particular, who has been pretty vocal about what has been going on here, says that when a company, in this case, United Healthcare, attacks its critics, the probability that has committed fraud or guilty of a crime increases substantially. And here he calls it a psychological short that he has on United Health. He says he would avoid the stock. He says when you find 2 cockroaches, it is almost certainly that there are many more. Now, this has been a heated debate. I know, Katie, you've been watching this too. United Healthcare has shot back at Bill Ackman as well. So this has been a argument here between the investor.
Super smart to get into a Twitter argument with Bill Ackman.
That's the way
great PR.
Policy happens through X now, Matt. I hope you know. So the government is watching and listening. He had this tweet. He's now since deleted it, basically saying there was an operation happening and it was stopped mid-operation because they had to call the insurer. Again, we don't necessarily know the veracity of that because he did delete it. Not only that, United Health has been investigated by the DOJ on antitrust terms too. There's so much negativity around this stock, and this again just adds another layer to
around the industry.
Correct.
There's a lot of negativity around this industry.
I don't believe United Healthcare has responded to the current Ackman tweet, though you're right that this argument has been between previous.
Yeah, and I do love that Ackman calls it a psychological short, since we know that he's not really in that business much anymore. Let's talk about the spillover effects, though, because it's not just United Health that is falling sharply today. You take a look at CVS, Elevance Health, Humana, et cetera, all these other insurers falling as well, which is interesting because you could say that this is pretty specific to United Health, but traders just seem nervous.
I think, though, one of it is we have to remember the kind of environment we came into 2025 with politically. This idea that it would be deregulation, that M&A would be happening. It would be an easier environment for corporations. The M&A hasn't really been there, and we're seeing all this action from the policy side that's been hurtful for these companies. United Health is just another instance of this. You can also look to Howard Lutnick yesterday talking about cruise operators and not letting them get away with some of the tax loopholes they have.
Right, and tankers.
Correct. It is a market that is now being dictated by political policy. And again, this has tinges that I think will surprise people because they thought it would be a lighter touch when it came from the DOJ.
Danny, thank you so very much. What a long morning you've had. Very amazed by your encyclopedic knowledge of what has been going on this week. Anyways, coming up, traders who cut their teeth during the 1980s rise of the junk bonds are now the winners of the private credit industry, which is minting billionaires. That's next in today's Wall Street Beat. This is Bloomberg.
Your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
And it's time now for the Wall Street Beat. Today's big take looks at how the rise of private credit is shaking up the ranks of billionaires on Wall Street. And look at just the 5-year stock moves of Ares and Blue Owl, which have minted 8 billionaires, according to Bloomberg's data. Bloomberg's Ben Stupples co-wrote the story, joins us now. It is just pretty incredible. I remember covering Blue Owl when it started. They were one of the earlier Wall Street unicorns, and now they, I believe, are larger in market cap than even Carlyle. Certainly Ares is as well. So they've grown really fast in a short amount of time. What's more stunning is the amount of billionaires, as we've been talking about. How was all of this wealth amassed?
Well, it's interesting. Thank you, Shanali, for having me on. If we remember back in the pandemic, we had Eric Yuan as sort of the poster boy, I would say, of that sort of period. In this age, when we've got interest rates higher for longer, the wealth is amassing there. Look at the share price you just had up on the screen for our viewers. I mean, the share prices of these companies have more than tripled since 2022, when the Federal Reserve started hiking interest rates for the first time in years. So in this different age that we're living in, these are the new sort of poster children, poster boys of this, I would say, the macro picture that we're having at the moment. They're reaping the biggest benefits and making a lot of money for other investors too.
Yeah, just looking through the list here, I think poster boys is a fair term. I don't see any women on the list. Are they not involved in this, billionaire minting madness?
On the list, yes, you're right, Matt. You're right. There's actually no women. These men are all white. Actually, all pretty incredibly well educated. Made me feel quite inferior. I think the Golub Capital founders.
Well, you've got a British accent.
About 6.
At least.
That gets me going, but those guys, for example, have 6, I think, degrees between them. I think it's a byproduct of maybe the industry, how it's changed. A lot of these guys have been, yes, they've got rich in the last maybe 10 years, 5 years or so, but actually they've been at this for 30 years, some of them, maybe even 40. So that's the change. If you think about what Wall Street was like 40 years ago, that's when they started sort of crafting their trade, and they haven't stopped, and now they're really reaping the gains.
Yeah, well, let's talk a little bit about what this means for the pipeline, what this means for the talent war that we talk about all the time on Wall Street, because you note in your story that all but one are in their 50s and 60s, but I have to imagine that some of the young bucks on Wall Street are reading articles like this, seeing how much money you can make in private credit and saying, hey, maybe I should pivot.
That's especially true. I think if you are in a big Wall Street bank right now, and yeah, you're there thinking, I'm highly regulated, I'm working in this space, and some of these firms that we're writing about today started out as sort of spin-outs from some of the Wall Street giants that we cover every day. I'd certainly be there if I was then thinking, gosh, I can get a higher performance fee, higher management fee, and maybe some other sort of performance incentives that would be better for me as well. If I'm outside this sort of more regulated space in banking, I go into private credit. Of course, private credit is such a catch-all term for other things as well. You could be in a private equity company that's traditionally known for buyout deals over the last 2 decades, for example, and you could shift into private credit. So the sort of transferable skills that you're seeing, I think, across Wall Street are fascinating.
Matt, it's pretty interesting. Ares, I just looked, is not only bigger than Carlyle, it's 3 times bigger than Carlyle by market cap. Arrighetti is in his early 50s and leading a lot of that rise. And
he's young.
Young, and also the amount of headcount they have for a $50 billion company, it's 3,000 people for a $50 billion company, less than 700 for Blue Owl at a more than $30 billion company per headcount market
Speaking
cap.
of Arrighetti, what's coming up next week?
Excited for that interview. We are going to Ares to talk to their new co-presidents, perhaps billionaires or close to it as well, I'm sure, and Mike Arrighetti in an exclusive next Thursday.
Yeah, I'm psyched for that. I love the whole private credit space. It's the Ozempic of big banks. And Stu, thanks so much for helping us cover that. Coming up the next hour, SailPoint CEO Mark McLean joins the show following his company's IPO this week. This is Bloomberg.
Been offers before to take over Greyhound, but then in the middle of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognize the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez. Nerves are frayed in Israel a day after 3 empty buses blew up near Tel Aviv. Israeli officials say unexploded bombs were found in parking lots in Holon as well. Chava Borowski was nervous about taking a bus in Tel Aviv this morning, but got on anyway.
I understood yesterday they did go through all the buses and make sure, did do the checks that they needed to do. Unfortunately, we have to be always on top of these things.
No injuries reported in yesterday's explosions. A statement today from the family of Shiri Bibas blames Prime Minister Netanyahu for abandoning the mother and her 2 young sons a day after Hamas returned the boys' bodies, but sent the remains of a Gazan woman instead of their mothers. CBS's Robert Berger from Jerusalem.
Prime Minister Benjamin Netanyahu is saying it's a cynical violation of the ceasefire and vowing revenge. But I don't think Israel wants to blow up this peace deal.
Hamas is asking Israel to return the remains of the Gazan woman. A federal judge has given the Trump administration the green light to proceed with federal job cuts. At least 10,000 government workers have already been laid off, among them Kate Sandland, who recently moved to Washington, D.C. when she was hired at the NIH.
I wiped out my savings account. I maxed out my credit card. I had to take out a loan. People like me, where I'm from, rural Alabama, like these kind of jobs don't happen to people like me.
In his first sit-down interview, Border Patrol Chief Mike Banks tells CBS News unlawful crossings at the U.S. southern border are down 94% over this time last year. About the possibility of administration cuts to his department?
Very difficult for me to say what DOJ would or wouldn't do, but I can tell you that I would be surprised if DOJ felt that the U.S. Border Patrol was properly staffed.
26-year-old Luigi Mangione, accused of killing a top health insurance executive, is due in court today. CBS's Nikki Battiste.
Mangione faces 11 charges in New York, including terrorism-related murder charges and weapons offenses in the shooting death of United Healthcare CEO Brian Thompson last December. Thompson, a husband and father of 2 from Minnesota, was shot in the back. Mangione has pleaded not guilty. He also faces multiple charges in Pennsylvania and in federal court.
A big change for the Bronx Bombers. 49 years after the late George Steinbrenner instituted a ban on beards, his son Hal has just announced facial hair, beards specifically, will now be allowed as long as they're well-groomed. The Dow is down 371 points. This is CBS News. Fraud operation uncovered behind prison walls.
Federal prosecutors in South Carolina say it was an elaborate scheme. They say several inmates in state prisons stole identities and ran a $5 million COVID fraud operation from behind bars. They allegedly used contraband cell phones to extort people for personal information and then used that information to collect $5 million in COVID-19 benefits. Prosecutors say they got help from several people outside of prisons.
That's Jim Crisula reporting. Betty White fans will be able to show their love on letters and cards.
Thank you for being a friend.
The Postal Service says Forever stamps with the late actress image will debut in her hometown of L.A. March 27th. The portrait, a digital creation, shows the Golden Girls star in a polka-dotted top. White died in 2021 at the age of 99. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney. Sweeney on Bloomberg Radio.
Good Friday morning from the Bloomberg Interactive Brokers Studio in New York City to our worldwide audience. We are streaming live on YouTube, so you can head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. Coming up, we're going to check in with Joanne Shu. She is at the University of Michigan. We had some UMich data coming out today about current sentiments, a little bit weaker than expected. We'll break it down. And then we're going to check in with Ender Curran, Bloomberg Global Economy Reporter, get the latest on tariffs, how they're impacting businesses large and small. Katie Kaminsky, Chief Research Strategist at Alpha Simplex, will get her market call coming up as well. Drew Redding, Bloomberg Intelligence's U.S. home building analyst, to discuss home building sales. We got some home building sales numbers today. Again, a little bit weaker than expected, so we'll break all that down in the coming. Alex Steele is off today, but Emily Grafeo once again sitting in for that. Alex, that's great. We appreciate it.
I passed my test yesterday.
Yes, you did. Flying colors, doing a great job. So we appreciate Emily giving us a couple hours here. Hooters in talks to prepare a bankruptcy filing in coming months. Shattering news crossing the tape. Let's go for Lisa Mateo and see what she's got here at Bloomberg Business Flash.
I used to love that place. All right, good morning. This Bloomberg Business Flash brought to you by IBKR. Will the year-over-year change in U.S. PPI exceed 3% in February 2025? At IBKR Forecast Trader, the yes recently at 39%. What's your take? You can trade your prediction at ibkr.com/forecast. All right, more economic data out, so let's get right to it. We had U.S. business activity. That moderated. The service sector cooled. Getting to the numbers, S&P Global Manufacturing PMI, the expectation 51.4, came in a tick higher, 51.6. Its read on services PMI, forecast was for 53, came in lower at 49.7. Then we go to existing home sales for January. The survey, 4.13 million, came in lower, 4.08 million. And finally, that read on sentiment from the University of Michigan, Paul just mentioned it, expectation 67.8, yeah, came in weaker, 64.7. To the markets we go, and the Dow leading the losses, down about 0.9%, 408 points. We have the S&P 500, 0.4% down. The NASDAQ down 0.3%. A big part of the Dow, though, sell-off in United Health. That's after that Wall Street Journal report. The U.S. Justice Department investigating its billing practices, so its shares are down 9%. And then we go to stocks in Asia rising. Hong Kong's Hang Seng Index jumped 4%. 14% surge in Alibaba, pushing Chinese tech stocks to their highest level since 2022. We have the Bloomberg Dollar Spot Index up 0.1%. Japanese yen right now a little change at 149.72 against the dollar. We go to the euro down 0.2% at 104.75 against the dollar. And the 2-year yield 4.23%. That's down 3 basis points. The yield on the 10-year 4.46%, and that's down 4 basis points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Emily.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Lisa was just mentioning, the University of Michigan sentiment data came out today, weaker than expected. 64.7 was a headline number. The consensus was 67.8 last month. 67.8, so a little bit weaker there. Let's break it down. Joanne Shu joins us, surveys of consumers director at the University of Michigan. Joanne, what did the numbers tell you today?
Essentially, consumers are feeling less optimistic about the future. Consumer sentiment declined over the course of the month of February, and consumers do see that the outlook is looking a bit weaker than it was about a month ago. The main reason for this is that they're becoming much more concerned that inflation is going to come surging back in the future. Inflation expectations really got quite a bit worse, both in the short term as well as the long term.
So all 5 components of the index deteriorated, including a decline in buying conditions for big ticket items. How do you interpret, what kind of macro signal you get out of something like that?
Consumers are seeing signs of weakening throughout the economy. We see it, again, in terms of buying conditions for durables. So that's mainly because people are really worried that it might be too late to avoid tariff-related price hikes in the very near future. The consumers are also expecting unemployment rates to get worse over the next year. So they're seeing potential weaknesses in business conditions, in their personal finances, as well as in inflation and big buying conditions for big ticket items.
Are moves of this magnitude, again, 64.7 was the actual, 67.8 was kind of last month. It was also the consensus for this month. Are misses of this magnitude, are they common in your survey work?
What's a little bit unusual is that we're seeing declines across the board. Usually at the 5 index components, some are moving up, some might go sideways, and some might move down. But this time we're seeing all 5 index components all moving down at the same time. Both inflation expectations figures moving, getting worse at the same time, as well as unemployment expectations. This, not necessarily saying people think things are getting a lot worse, but they're seeing concerning signs across the economy.
Interesting. And again, the University of Michigan 5 to 10-year inflation outlook, the consensus was 3.3%. Was the outlook. It came in at 3.5%, so as Joanne was mentioning, a little bit higher there, a little bit concerning. Joanne Shu, surveys of consumers director at the University of Michigan. They don't just make good football players, they make some pretty good economists out there in Michigan. Speaking of tariffs, let's get the latest here because it is a fluid situation. We know that tariffs are an economic policy that President Trump likes to employ in various ways. Enda Curran joins us, Bloomberg Global Economy reporter. Enda, kind of where are we here on the tariffs? I mean, I think people are trying to get a sense of what tariff discussion is real, what tariff discussion is maybe just a negotiating point with other countries. How's the thinking around tariffs evolving?
Well, it's moving and it's moving fast. If you consider the action so far, there has been a 10% tariff put on all goods from China. That's actually happening. It's real, and it's new because it's covering all of the goods from China, not just targeted. Then, of course, we have various executive orders that have been signed asking the Trade Representative Office and Commerce Department, excuse me, to go out and analyze how the U.S. is doing business with the rest of the world. They're going to come back with a lot of reports by April 1. And this, in the meantime, we will see new tariffs go on steel around the middle of March, I think it is. So, yes, there is obviously some rhetoric and a lot of headlines, but at the same time, there is also concrete action that's happening. And we're seeing companies respond. We're seeing consumers respond. You just had Joanne talk there about the impact on consumer sentiment, and we're speaking to companies who make similar points as well.
Enda, you have a wonderful piece of reporting out on the terminal today, all about small businesses and how they're reacting to the prospect of tariffs and the tariffs that are already in place. Tell us about what your reporting showed.
Sure. Well, so the thinking when it comes to tariffs is that big multinational companies are better resourced. They can shift supply chains. They can adapt. They can maybe absorb some of the hit into their margins. But the real pain comes to those small business operators, those small manufacturers in the U.S. who rely on, say, imported components from China and the rest of the world. And we found out, we spoke to a lot of these people. They make all kinds of products, whether from lighting to fasteners to tonka toys, and all of them made the same point that if tariffs on the goods they're bringing in at the port go up, then their margins are at a point, they're squeezed to a point where they can't absorb that, and they're going to have to pass those costs on to their consumers. So this is small business people warning about the hit to their confidence, hit to their investment plans, and the fact that they have to pass these costs along.
What's the feeling, Enda, about reciprocal tariffs? If in fact the U.S. does move forward on tariffs against certain countries, is just the expectation that almost a knee-jerk reaction to those countries will react and put tariffs on our goods as well?
I think that's the reaction function for trading partners. We've already had China respond. China's put tariffs on U.S. agricultural equipment going into China, for example, and they've put some antitrust investigations on U.S. companies. The EU Trade Commissioner was in D.C. this week, and I went along to his events, and he was making the point that he came here to talk deals. They were happy to buy LNG, they'll buy soybeans, ready to bring down tariffs on U.S. cars. But he also made it clear if that isn't enough, and tariffs go ahead on European goods, well, Europe will respond too. They have their list, he said, and their list of grievances, and they're ready to go. So this is the big danger that people make the point about. Yes, you can have headlines on tariffs, maybe it's leverage, maybe you reach some kind of a deal, but if tariffs go in and you get this tit-for-tat spiral of a trade war, then ultimately it will weigh on business confidence and sentiment.
What are you seeing so far about just the extent of all of the talk of tariffs actually affecting inflation? Because you see headlines every day that, analysts are saying that the tariffs are going to increase inflation. And what is your reporting showing about just how businesses preparing for the prospect of tariffs? How does that actually affect inflation?
Well, we're still early, right? The inflation story is still very much kind of about stubborn services inflation, I think more so than goods prices. But we're at a delicate point in the inflation story when, hang on a sec, wasn't it meant to be all about disinflation? Well, it looks like that might be a little bit rocky now. Throw on top of that the point that maybe there will be these tariffs going on typical consumer goods coming to the country. Well, then the thinking among economists and businesses, as I say, businesses are warning they'll have to pass on. Economists say prices will go up, will have to go up near term. That's where it becomes more pointy. I mean, okay, near term prices go up, but what's the second round effect? Is it one-off inflation impact that kind of policymakers and others look through, or does it set in chain longer term higher inflation expectations? Maybe that's the hint coming out of the Michigan survey today, for example. That's where the big economic crunch does come. But right here, right now, of course, companies and consumers warning what it means for prices, what it means for inflation, and longer term, what it means for confidence.
Very good. Enda Kern, thank you so much for joining us. Enda Kern, global economy reporter, Bloomberg News, joining us from Washington, D.C. Via Zoom. All right, Emily brought into the studio today a green drink. What are you drinking?
So I'm drinking matcha. They have matcha concentrate on tap on the 6th floor.
Of course they do.
At Bloomberg. This is new.
Okay.
It's a green tea powder concentrate. And the caffeine hit that you get from it is supposed to be less jitterier.
Less jittery.
Less jittery than coffee. So, but there's matcha shops all around
I know
New
there
York.
is. How does matcha taste?
It tastes like earth.
Jeez.
It tastes a little earthy, a little nutty, but I've gotten used to it. You can actually get like
So
matcha
you're substituting
chocolate.
this for coffee?
Well, I already had half a cup of coffee.
Okay.
And then I thought, oh, I'm going to do something different, get the matcha, and then maybe switch to coffee.
All right.
After.
I was in a hipster bar last night in Brooklyn, feeling very out of place. I looked around the bar. I didn't recognize what any of these people were drinking. I asked for a bottle of Budweiser. It got shut down there. They did not have Budweiser.
Really?
So I should have just turned around and left. But
You were in a fancy part of Brooklyn, weren't you?
downtown, I think. I don't know what the thing is. I don't know. But anyway, it was fun. Kids are drinking different stuff now. Matcha.
I've actually seen matcha in cocktails.
Really?
Yeah.
Oh, jeez. The world's coming to an end. And then, on the same day, Hooters says it's going to prepare for bankruptcy. The whole world is coming to an end. That's the only way to think about it. So we'll keep on top of that. Dow off 343 points. United Healthcare, they're responsible for 240 of those points. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, we've got stocks falling, bonds rising. We're coming closer to the end of what has really been a volatile week on Wall Street. We'll start with the Dow. It's leading the losses, down 0.8%, 369 points. We go to the S&P 500, down 0.4%, 27 points. And the NASDAQ down 0.4%, 80 points. The two-year yield, 4.24%, down 3 basis points. The yield on the 10-year, 4.46%, and that's down 4 basis points. To commodities, we have COMEX gold lower at $2,940 an ounce. We have Brent crude down more than 1.5%, $75 a barrel. WTI crude, $71 a barrel. The Bloomberg Dollar Spot Index up about 0.2%, and Bitcoin up about 0.5% at just over 98,000. Tracking shares of Nissan, they're routing higher, up 9% in Tokyo. This is after a report from the Financial Times that this high-level Japanese group has drawn up plans for Tesla to invest in the company. But former Tesla board member who was actually named as part of that group, well, he says he has no involvement in it, and he isn't aware of any such deal. We shall see. Tesla shares, though, this morning they are down nearly 1%. We go to digital payments firm Block, the parent company of Cash App, Square, you know them. Their shares this morning, they're lower, down about 15% after issuing weak guidance. And a similar story, this is over at software firm Akamai Technologies. They're slipping after issuing that weak guidance, so its shares this morning are lower, down same 15%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Emily.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio in New York City. We're also streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast Live, and we pop right up here. Looking for some trends in the marketplace today. Just kind of a risk-off kind of day. The United Healthcare news weighing on the Dow, certainly, but people trying to get a sense of economic data and earnings growth and all that good stuff. It looks like the Fed's going to be more or less on the sidelines for most of this year. Katie Kaminsky joins us. She's a chief research strategist, Alpha Simplex Group up there in Boston, Mass area. Lots of MIT stuff going on in her resume. I don't know what's going on there. It's a lot of math, I think. Katie, thanks so much for joining us here. How are you guys thinking about these markets today? Where are you guys seeing interest, opportunity, value?
Well, to be honest, it's been a little bit of a reversal the last 2 days. We've generally been following that U.S. exceptionalism theme across multiple asset classes, and it seems to be stumbling a little bit. And, the market is definitely a little concerned. Today really doesn't seem to be any different from that. So we'll have to see what that means, I guess, in the next few weeks.
Yeah, how are you thinking about correlations between stocks and bonds right now? I know we said it was a risk-off day, but today we're seeing, people piling into treasuries, exiting stocks. I guess that could make sense with the risk-off theme, but we haven't seen that correlation kind of play out every single day over the last few months.
That's a really good point, because we actually have seen on aggregate positive stock bond correlation often more recently. And what that means is that the market is trying to figure out how much is inflation important, because that's what anytime the market's concerned about inflation, the correlation between stocks and bonds changes quite a bit. But today just seems to be a classic risk-off type of day where, people are nervous, consumer confidence is down, long-term inflation expectations are up. So I think people are just a little nervous about what all this means.
Katie, one of the trades that's been pretty solid for a lot of people for a long time has been just buy the dollar. It was certainly part of, quote unquote, the Trump trade. We've had a little bit of a pullback in the dollar here. How do you think about that long dollar trade here?
Well, the long dollar trade, just had everything going for it earlier this year. You really saw, given the Fed being on the sidelines, that means that there's less pressure on the dollar. The idea that the U.S. was looking strong, and that was making the dollar strong as well. But as some of those narratives have petered out a little bit, or perhaps extended quite a bit, we've started to see some reversion in that theme this month. And so I think a lot of people are starting to wonder, could this theme come back, or is there just a lot of noise around a lot of the geopolitical and also the changes in the U.S. administration that could sort of shift dynamics?
I actually have a colleague on the FX team who asked me today, have you seen anyone turning bearish on the dollar? So maybe I'll throw the question to Katie. Is it time to turn bearish on the U.S. dollar?
That is actually a good question. I think people are asking that question, especially versus things like the yen, where there's a more clear narrative, where, BOJ is doing something different. But I think the question is this just a reversion from the consistent theme, or, have we kind of shifted course? And so far, it doesn't look like it yet, but there has been some indication that the dollar is backed up, particularly this month.
Another trend that's been pretty pervasive has been gold here. And the Bloomberg Intelligence commodity strategist, Michael McGlone, has said for years and years and years in terms of commodities, buy gold and short everything else. I guess the fundamentals for gold look really solid.
Yeah, gold has been one of the tried and true trades for trend in the last few months. Of course, it reverted a little bit this week, but there just seems to be a lot of structural reasons why people want to hold gold. There's a lack of supply of gold. People don't want to loan out gold. So it just seems to be sort of that safe haven that it, especially in a world where there's, more of supply chain and other, issues globally across central banks. So I think, gold seems to be your sort of safe haven asset, and that doesn't seem to be stopping yet.
I have to ask a question about managed futures, because Katie, you wrote a book about managed futures.
Oh boy.
And without getting too technical here, I do write about ETFs, and we have seen this year BlackRock, Invesco, and I also believe Fidelity file for managed futures ETFs.
Wow.
What do you make of this? Is this like really a vehicle that should be in the ETF wrapper, and something that retail should be looking into?
I would say absolutely yes. It's a very exciting, and we wrote this really exciting paper recently about this new field, sort of the managed futures ETF, the rise of it. And what's exciting is, since there were changes in U.S. Transparency in the regulations for active ETFs, now there's a lot more ability to incorporate dynamic and active strategies in an ETF wrapper, which allows people to invest in such strategies on an intraday basis as opposed to sort of a typical mutual fund structure. So I think you're going to see a lot of opportunities for beta-like products that give investors access to a dynamic range of asset classes over time. So it's an exciting field, and something I'm super excited about. So thanks for asking.
Very good. Awesome. Who knew? ETFs for everything. Katie Kaminsky, Chief Research Strategist, Alpha Simplex Group up there in Cambridge, Mass, talking to us about kind of some of these market trends out there. We had some economic data today. One of the data points came out was existing home sales came in at 4.08 million. Consensus was 4.13, so a little bit weaker, and it was weaker than last period here. So let's see what's happening. I'm looking at the 30-year mortgage, about 6.92%. So still high, but probably the new normal here. So let's go to Drew Redding, Bloomberg Intelligence housing analyst. Drew, talk to us about the existing home market. Again, the data came in a little bit weaker than expected. What are you seeing?
Yeah, no surprise here. It's all about affordability or a lack thereof. Home sales were down about 5% sequentially, up 3% from last year. But keep in mind, that's off a very low base. Last year, we did about 4 million transactions, which was the lowest level in about 30 years. So typically, going back to the 60s, we do about a little more than 5 million a year. We've looked at the pending home sales data from Redfin. It shows that, current sales are the lowest on record. And look, there's not a lot of relief coming. Rates, like you mentioned, are probably going to be higher for longer. We're hovering around 7% on the 30-year. Prices continue to rise. I think we're up about 5% from last year. And, that puts us at about 50% or so from pre-pandemic levels. So There's still, a lot more caution among buyers, and we've heard that from some of the builders that we've talked to. You've got folks who might be concerned about their employment situation, and others are kind of waiting to see what happens. You have to remember, we've had a lot of people out in the market who are under the assumption that rates were coming down. In the meantime, housing has gotten less affordable. So really, there's just not a lot of urgency in the market.
So is it fair to say then that the rate cuts that we've already seen so far from the Fed haven't really done anything to, I guess, loosen up the housing market?
No, they've actually done the opposite. I mean, since the Fed started cutting up rates, you've seen an increase in the 10-year and an increase in the 30-year mortgage rate. And as those started to creep up towards the end of last year, in November, December, we saw a real slowdown in the market, both for resales and the new home market.
So is there a rate out there, Drew, that you and maybe some of the home building companies you follow that will start to clear the market of existing homes? Like if I'm a seller or if I'm I have to assume that rates are going to stay higher for longer, and that'll get buyers and sellers together. Is it 6%? Is it 5%?
Well, what we've heard over the last couple of years since rates have been elevated is if you get something with a 5 handle, that really starts to unlock the market. And look, we're a long way off from there. But that's also one of the reasons why the new home market over the last couple of years has done particularly better, because they've been buying down mortgage rates. So if you see something, at a headline rate of about 7%, builders are getting that into the mid-5s and the 6% range. That being said, as I mentioned, rates aren't the only thing at play here. You've got prices, and I think now you've got more uncertainty in the market. So even with rates moving around a little bit, it's not really stoking that much demand. I think first and foremost, what buyers want to see and what the market needs is for rates to stabilize. We're kind of been all over the place, up and down, and you just can't really get a good grip on what your payments are going to look like. So I think first and foremost, you want to see a stabilization in rates.
One of the other takeaways from the data report that we got today was that despite a bigger selection of properties on the market, homes are taking longer to sell, staying on the market for an average of 41 days in January. How are we supposed to interpret that?
Yeah, so some of the other data we looked at shows homes sitting on the market even longer, up around 2 months, which is the longest period since the pandemic. And look, one of the reasons why inventories are growing across the market, we're up 17% from last year, is because homes are sitting on the market longer and you have new listings coming on the market as well. So these two factors combined are pushing up inventories. Now, if you look at the national level, we're still below 2019 pre-pandemic levels. But when you start to look around the country and look at some of the most important markets like a Texas and Florida, particularly for the builders, right, you've got inventory levels which are well above 2019, and that's going to start to put some pressure on pricing.
Interesting. All right. When I bought the Jersey Shore compound a couple of years ago, I got 6% mortgage. I thought I was a complete dunce. Now I'm looking pretty smart. Things are up close to 7%. Drew Redding, his job, he's a home building analyst for Bloomberg Intelligence. He's based down there in Princeton, New Jersey. Looking at the markets, we have red on the screen, S&P off 38 points, the Dow off 390, and the NASDAQ off 137. We'll have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got stocks extending their losses. This is after the latest economic data. Well, it pointed to slower activity mix with higher inflation expectations. We'll start with the S&P 500 because it already wiped out this week's advance. It's down 0.5%, 35.6082. The Dow down 0.8%, 358 points, really under pressure from that sell-off in United Healthcare. Then we go to the Nasdaq, down 0.6%, 129 points. The two-year yield 4.24%, down 2 basis points. The yield on the 10-year 4.46%, and that's down 4 basis points. The Bloomberg Dollar Spot Index down 0.2%, and we have Bitcoin down nearly 1%, just over 97,000. Shares of energy drink company Celsius on the rise. They're up 24%. It said it's acquiring its rival Alani Nu for $1.8 billion in cash and stock. And Rivian shares still lower, down 6%, more than 6%. The possible impact from tariff and incentives changes, well, that's pushing its EV deliveries this year to fall short. And finally, for those travelers, shares of Booking Holding, that's a parent of travel brands Kayak, Priceline. It posted a strong fourth quarter, and its shares are up 3.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Emily.
All right, Lisa Mateo, thank you so much. We appreciate that. Emily Garfeo, sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming as well on YouTube. So you can just go over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. As Lisa was just mentioning, we had some Rivian news post first quarter gross profit as EV policy risks loom. They saw their adjusted EBITDA a little bit weaker than expected. A lot of news coming out of the global auto market these days. So we want to check in with Steve Mann, global autos analyst for Bloomberg Intelligence. He's based down there in Princeton, New Jersey. Steve, let's start with the Rivian news. How is this company doing these days?
I think they executed very well in the fourth quarter, and for the most part in 2024. As you said, they actually had a gross profit in the fourth quarter, first ever. If you take out some of the non-cash items, and if you take out credit, they still broke even as they promised. But the only thing is they have huge operating leverage and improved costs. But, they just can't get enough volume through the plants to really benefit from the cost-cutting initiatives.
And what do you attribute to that not being able to do so?
Yeah, their guidance were lower than expected. There's some concerns about, the Trump administration cutting the 7,500 EV tax credit, denting sales. So, and then the other thing that, they're planning to do is shut down the plant for part of the fourth quarter to really, bring on the R2, a smaller mid-sized vehicle next year. So there's some kind of top-line headwind that's impacting. But then again, look, they've done a really good job. You step back, they've done a really good job in rationalizing their capacity, their costs. I think it's just a matter of time that we're going to see huge profit windfall for them when they get the volume up.
So, Steve, what's the feeling in the EV marketplace these days about where demand is on a global scale here for EVs?
It's still strong. We're actually predicting that EV sales will be up single digits, similar to last year. And then in 2026, 2027, I think that's when things will improve. Like if the $7,500 EV tax credit goes away, there are a lot of new affordable vehicles coming into the market. So I don't think the consumer will need the $7,500. So I think demand will improve, and I think we'll have to wait until 2026. And specifically Rivian, we're very positive. I think they are going to launch a new mid-sized vehicle that's going to resonate well with the consumers.
What did you learn in Rivian's report about just how the company is reacting to the prospect of tariffs?
It's something they can't control, obviously. But I think they were anticipating the $7,500 going away. They don't expect that to continue forever. And that's why they took that cost-cutting initiative at the middle of last year and really reduced costs by more than 30%. And that will allow them to actually have more flexibility on pricing. And the second thing they're doing is they understand what the consumer wants. They want a more affordable vehicle, and that's why they're going to launch the R2 in early 2026 or late 2025. So they've anticipated that.
Steve, we can't talk to you without talking about Tesla. Stock's off 2.5% today.
Yeah.
It's off about 15% year to date, but it's up, almost 75%, a little more than 75% over the trailing 12 months. So it's kind of the typical volatility that we're, I guess, used to with Tesla here. What's the feeling out there today? Is Elon Musk a net positive or maybe even a little bit of a net negative for this stock right now?
I think the concern is really some of the sales that's been pretty weak in the U.S. and as well as in Europe. And I think the rhetoric and there's news out there, there's surveys out there saying that Elon Musk is having an impact. His involvements with Doge. But at the end of the day, if I step back and look at the product rollout, the product rollouts that they're coming up with this year with the new Model Y, I think that the Model Y rollout is having some impact on current sales because customers are actually waiting for the new vehicle. And also, there's an affordable model also from Tesla coming out later this year. I think it's going to be a slower year for Tesla in terms of sales, but I think in the second half and into the fourth quarter, it will definitely pick back up. There's already signs of strong demand for the Model Y. If you look at China, they start delivering the new Model Y, and consumers are really liking that vehicle right now.
I have to ask about the Cybertruck. Anecdotally, I've seen this vehicle everywhere on the streets of New York City, but I'm not sure if, I'm just noticing it more. But what are the sales looking like for the Cybertruck?
The Cybertruck is not going to be like a high-volume vehicle like the Model Y or 3. It's still a niche market. I think it helps Tesla build the brand as a high-tech company. It doesn't resonate with everyone. But it does resonate with a large group of consumers that do believe that Tesla has the technology, the manufacturing technology, and the vehicle technology, autonomy technology.
Outside of the dedicated EV manufacturers, what are the diversified OEMs doing, the Fords, the Volkswagens? How are they viewing kind of their EV strategy these days? It seemed to have been fits and starts here.
Yeah, that's a good question. I think, that definitely there's some slowdown investment, but, full steam ahead. They're slowing down investment because of the market condition, but they're not stopping. Mary Barra, the CEO of GM, recently said that, look, the future is electrified vehicles, EVs. They're not even spending a lot on hybrids. They're not going to invest that much on hybrids. They're going to, hybrids are just a stopgap measure, and they're going to go full on EVs. They're going to have 11 models pretty soon, the most out of the American and Western automaker, and they've gained a lot of share. They're at 12.5% market share on EV in the U.S., and they're poised to gain more share. So I think GM. You're hearing that from Toyota. And Honda. Honda's rolling out the Series 0 EVs. So I think EVs are here to stay. I think we're just seeing a cyclical downturn as more models roll out. I think demand is going to be there.
Steve, thanks so much for joining us. Steve Mann, he's a global autos and industrials research analyst for Bloomberg Intelligence. He's based down in our Princeton, New Jersey office. Taking a look at some of these EV companies here as this evolution from internal combustion engines to EVs continues to take pace there. Looking at the market here, S&P 500 off 38 points. The NASDAQ trading down about 145 points. Coming up, Tom Maloney, Bloomberg News editor, on the Bloomberg Big Take story entitled Private Credit Billionaires Emerge as the New Finance Rich. How about that? This is Bloomberg.
to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Emily Grafeo sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well, so check us out there and search Bloomberg Podcast Live, and that's where you find us. Early in my career at the Chase Manhattan Bank, I was a leveraged loan banker. That means we made loans to people that didn't have a lot of assets, but they had a lot of cash flow. So we'd lever up 4, 5, 6 times net debt to EBITDA. We took 2 to 3% fees right up front, LIBOR plus 300 or 400 basis points. We syndicated all our risk out, and then we turned around and did it all again. That was a great business. I think the new great business over the last 15 years has been private credit. Those people have come out of nowhere and are making money hand over fist, and they're building up some big fortunes as well. And that's the subject of our big take story here today. Wall Street's new money is shaking up the ranks of the super wealthy. Tom Maloney joins us. He's an editor for Bloomberg News, joins us here in our interactive broker studio. Talk about a business, Tom, that really since the great financial crisis has just exploded. And a lot of people are making a lot of money, aren't they?
Yeah, absolutely. We wanted to take a look at exactly how many people were making money, and we identified 18 billionaires at these firms that have a majority of their business in the private credit space. And some of them are familiar names like Apollo and Ares, but there are a lot of firms that I was unfamiliar with when I started this project. Places like Oak Hill and Golub Capital and Cliffwater.
Yep.
So a lot of money being made for sure.
So why those names specifically? Like, what about those companies, and like, why were they surprising to you?
They were surprising to me just because, I mean, look, I'd never heard of Oak Hill. It's not exactly a household name like Apollo or like Ares, you know, one of those big Wall Street names that a lot of people have heard of that have been around for a long time. And some of these places have been around for a long time as well, but they've mostly been under the radar. But there's been so many acquisitions in the space, you know, big companies like BlackRock spending a lot to acquire private credit firms like HPS, and that's just making a lot of money for the founders.
One of the firms that, again, wasn't around when I started in the biz, Ares Management Corporation. Talk to us about this company, this firm, because I kind of consider them one of the founders, I guess, of private credit.
Yeah, absolutely. I think they are. You know, we looked at the founder there, but we also identified 3 other executives at Ares who are billionaires that we've identified for the first time. So it's not just the founders who are getting rich in this business. It's at a place like Ares or Apollo, you can be a kind of a senior executive, and there's just billionaires all over the place at those kind of firms.
This story is, it seems to me, fundamentally about money, and specifically billions. So can you help us understand, like, what is it about private credit in this field specifically that's generating so many billionaires? How do you make $1 billion from this business?
That's a really good question. I think there are a couple of things that people talk to me about as being really important and a kind of a driver of why there's so much money being made in that sector. You know, part of it is just a kind of a trend that's been going on since the end of the financial crisis. Banks have been retreating from lending, and that's made more opportunities for these private credit shops. And it's, you know, it's now a $1.6 trillion industry, or even bigger if you talk about it the way Apollo talks about it. And the other thing is there's just a lot of places playing catch up. I mentioned BlackRock acquiring HPS before. They paid $12 billion. They came to that agreement in December last year. So a lot of these firms that want to get in on that space, they're happy to pay, you know, huge amounts of money to acquire firms and get a kind of a foothold in the private credit space.
One of the, I guess, challenges or maybe headwinds for this tremendous growth story, which is private credit, is perhaps the lack of regulatory oversight. So when I was at Chase Manhattan Banks, we had auditors crawling all over us all the time looking at our portfolio. Is there a concern that that could be a headwind for this private credit and the growth of private credit?
You know, I think, look, I wouldn't be surprised if there is some sort of credit crunch in the near future, then people will put a lot of the blame for that on this industry and talk about the fact that banks got more regulated in the wake of the financial crisis, and that took some of the risk away from banks, but it put it in a kind of a grayer space where there just isn't as much clarity about what's going on. The risk isn't as widely spread maybe as it was at banks, and you haven't necessarily reduced credit risk in the economy. You've just shifted it and made it less transparent. It wouldn't be surprised. I wouldn't be surprised if that's kind of the headline take, 5 years from now.
What else stood out to you when you were compiling this list of these maybe unknown names in private credit?
What else stood out to me I think what jumped out at me is how many billionaires there are in the world of finance these days. We talked about not just founders. You look at Apollo, you look at Ares, you look at Blue Owl. It's not just necessarily the people that started these firms. It's their senior executives that can be billionaires these days. There are a lot more billionaires than people think out there, and that's one thing that's surprising.
There's a lot of co-founders and co-presidents on this list. There's CEOs, but there's co-president. You can be a billionaire.
Exactly.
Yeah, it's just, asymmetrical returns. You think about alternative assets, hedge funds, private equity, now private credit. That's where I think the asymmetrical risk-return relationship still exists. Everything else, I think the market's kind of cleared it out, but you can still make it there. And this story is a great story, shows you kind of some of the wealth that's been created in the private credit business. Tom Maloney, he's an editor for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. You can read more of this story on the Bloomberg Terminal and at Bloomberg.com/Big Take. Every day, these people at Bloomberg News, they came out with some awesome stories, deeply researched, deeply sourced, lots of great data. We like to highlight them whenever we can. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, folks, coming up a really strong hour here. We're going to check in with Michael McKee, Bloomberg International Economics correspondent, talk about the economic data we saw today, some weaker than expected UMISH data. We're going to break that down. United Healthcare really moving the market. The stock's down double digits here on a probe here on some of the Medicaid billing, so we're going to have the reporting on that. It's Friday, which means we do municipals. Heck yes, we love the muni bond market. And then a real treat at 11:30 Wall Street time. Mark Gurman, Bloomberg chief correspondent on global technology. Let's just be honest. He is the Apple reporter on global Wall Street. He breaks pretty much everything as it has to do with Apple. He's going to be in our studio. He's usually based out there in L.A. with the stars, but we got him back here with the working people in New York. So we'll have him on there. Speaking of working people, let's go right now to Mr. Charlie Pell.
All right, I thank you very much. Apple shares on a down day for the rest of the market. Apple now up by 0.1%, but the Dow, the S&P, NASDAQ, all in the red. U.S. stocks, they are extending losses after this morning's economic data pointed to slower activity combined with higher inflation expectations. S&P 500 wiping out this week's advance, right now down 32, down another 32 at 6,084. That is a drop of 0.5%. The Dow down 360 now, down 0.8%. NASDAQ down 126, a decline of 0.6%. And the Russell 2000 index of small cap shares hit hard today, down by 1.1%. 10-year 4.45%, the 2-year 4.23%. Gold down $10 the ounce, down 0.4%. 29.28 right now on the precious metal, while West Texas Intermediate crude is tumbling 2.1%, 70.97 a barrel. The latest University of Michigan Sentiment Index finds consumers' expectations for long-term inflation rose to the highest rate in 3 decades on concerns President Trump's tariffs will translate into higher prices. Joanne Shu is Director of Surveys of Consumers at the University of Michigan, and she was a guest right here on Bloomberg Intelligence.
Essentially, consumers are feeling less optimistic about the future. Consumer sentiment declined over the course of the month of February, and consumers do see that the outlook is looking a bit weaker than it was about a month ago. The main reason for this is that they're becoming much more concerned that inflation is going to come surging back in the future.
Joanne Shu of the University of Michigan. United Health Group shares tumbling after a report that the U.S. Justice Department has begun investigating the insurer's billing practices in recent months. The Wall Street Journal, now citing sources, reported that the department's civil fraud probe is looking at how United Health records diagnoses that led to higher payments from the government's Medicare Advantage program. Shares of United Health, they're down now by 8.8%. So again, recapping, a sell-off on this Friday. The Dow, the S&P, NASDAQ, all lower. S&P now down by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Emily Grafeo, sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube. Head over to youtube.com, search Bloomberg Podcast now, and that's where you'll find us. So we're on audio and the video things. Charlie was just reporting we got red on the screen. Red on the screen today for sure. The S&P off 0.6%. Let's see what's happening underneath the hood. We can do that with Denitsa Sekova, cross-asset reporter, Bloomberg News. I nailed her name 2 days in a row now. She joins us here in our studio. Denitsa, what are you looking at today?
Let's start quickly with United Healthcare. Obviously, everyone has been looking at that stock today, currently around down 9%. It's all coming off, of course, the news about the Justice Department investigation. We actually see some other names like Humana falling on the news, so this is not purely limited to United Healthcare. And one interesting take I want to bring is Morningstar is saying that the dramatic decline we're seeing in the stock is a little bit of overreaction comparing to the size of the company's exposure to Medicare Advantage. But they're saying that a lot of what's coming in terms of obviously DOGE policy and this kind of push for cutting costs is a reason perhaps investors are even more sensitive to the news.
All right, what else? CrowdStrike?
CrowdStrike, again, we're talking about prosecutors and regulators. We're talking about a 32 million transaction, which in the grand scheme of things doesn't sound that big, but for them, this is beat or miss a Wall Street projection for the period in 2023. So it's a very sizable projection. The investigation is about their relationship with technology distributor, which provides cybersecurity to the IRS. Of course, CrowdStrike says that they stand by their accounting, and we haven't heard more specific from the DOJ. But one interesting fact is that actually Barclays upgraded their target. This was before the news, from $372 to $506. So there is a lot of bullish sentiment about their fundamentals. Obviously, the investigations has pushed the stock down 7% in the 2 days. So that could be definitely a big change in tone.
Celsius Holdings. What do they do?
Energy drinks.
What?
Energy drinks.
Paul, have you ever seen a Celsius can? If you go to any bodega,
it's everywhere.
Here's a story
everywhere.
All right, here's this. I was in a hipster bar in Brooklyn last night, and I think I saw some Celsius for the first time. 20 people at the bar. I didn't know what any of them were drinking. I asked for a bottle of Budweiser. Don't have it. I should have just turned around and walked out. But Celsius, tell me what's going on at Celsius.
Well, they haven't been doing too well for some time. There is a lot of competition. Next time you go to the bodega, you'll see, Red Bull wants to do sugar-free flavors. But now they're buying one of their big competitors, Alani Nu, for $1.8 billion. So investors are very bullish on the stock. The stock is up about 30% today. So I guess that's reflective of the company, which has been struggling with competition. The stock has fallen 73% before today. So it was on a tough ride. It's very competitive landscape in the energy drink space. But these are some good news for Celsius, or at least investors are so far pretty excited.
Alani Nu. Never heard of that.
So you guys drink this Celsius stuff?
I don't.
I don't as well.
Yeah, but I feel like we have some colleagues that
yeah.
And is this like a dude thing primarily?
No.
Because Red Bull, I feel like, is kind of a guy thing.
I'll drink a Red Bull. I'll drink a sugar-free Red Bull.
Yeah? And what alcohol do you mix with the Red Bull?
I don't mix in alcohol with it.
The very classic one in the UK is Jägermeister, and it's very bad. This is the worst thing you can do to your body. So hopefully I don't suggest mixing them.
I discovered you can drink a sugar-free Red Bull skiing, and then makes skiing a lot better.
Really?
And you can just keep the can in your ski jacket pocket.
Interesting. All right, you learn a lot. All right, Denitsa, thank you so much. Denitsa Sakova joins us, cross-asset reporter, Bloomberg News. Someone who does not ski with a Red Bull in his or her jacket is Michael McKee. He's the economics fellow for Bloomberg.
Yeah, but you didn't mention Budweiser in the jacket.
Exactly. I mean, slopeside, après ski, I'll drink like a fat tire or something. That's kind of what I'll do.
Yeah.
That's what I'll do there.
Yeah, après ski. I mean,
après ski, yeah.
Because when you go in, I mean, we would always get when the lifts open and then you ski for as long as you possibly can, rather than go have lunch, because when everybody's at lunch there's no lines. That's great skiing. Then you're going to quit a little earlier than other people. But
and I found my most recent trip I went out just a couple weeks ago, I was quitting a little bit earlier than even usual. So, I mean, I guess that's getting old.
Maybe you need an energy drink.
Maybe I need an energy drink. University of Michigan, Mike, they've got some economists out there. The data wasn't great there in terms of sentiment and inflation and that kind of stuff.
Yeah, the sentiment dropped during the month to 64.7 from 67.8. It is quite a drop on the headline. A lot of this driven, of course, by politics. People concerned about if you're a Democrat or an independent, you're concerned about the Trump administration. Republicans are very happy with the way the economy is going. But it's the inflation expectations number that got everybody's attention, because the one-year inflation number went up in the preliminary from 3.3 to 4.3, stayed there in the final, but the final 5 to 10-year inflation figure went up to 3.5. So we're seeing some inflation concerns among the public, which the university survey people credit to Donald Trump's idea of tariff and all the reports that tariffs will raise prices. So it's hard to know. In the minutes, the Fed said we don't know exactly how to tell the difference between actual inflation concerns and things that are generated by what's going on right now.
How important is it for investors to pay attention to inflation expectations? Is it crucial, because sometimes if people expect inflation to go up, that can actually push the rate
That's
up.
what the Fed worries about, that it becomes a self-fulfilling prophecy. And when Paul starts to worry about inflation, he goes to his boss here and says, I need a raise. And when Mike stops laughing,
exactly.
But that's the kind of dynamic that it plays into. And the market pays attention to it in the sense that, obviously, if you're investing in fixed income, you don't want to see inflation. And we have seen market-based inflation measures rise over the past couple of months as well. The break-evens, especially in the short to medium term, have gone up. And so the combination is something that the Fed's got to keep an eye on.
So we had some PMI data out today.
Also not good.
Yeah, I mean, the services PMI, that's kind of the one I focus on, because that's 70% of the U.S. economy. I mean, the consensus was for 53, came in at 49.7.
Yeah.
That shows contraction.
It does show contraction, and it hadn't been in contraction for many moons. I think the last time was in basically 2023, coming as we were recovering from the pandemic in January of 2023. And if people are pulling back, and we got that bad retail sales number this past month, then it's also another reason for the Fed to be concerned. But they've got two opposite concerns. If inflation expectations are going up, then you want to raise rates. If the economy is slowing down too much, you want to cut rates. So probably they're going to stay where they are. But it's food for thought.
Yeah, interesting. All right, Michael, thank you so much. Appreciate that. Michael McKee, International Economics and Policy Correspondent, Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. The stock story of the day, United Healthcare, off about 9% here. We've got some oversight, potentially, some people probing, some regulators probing United Health. We want to get some of the details there. We go to Glenn Losef, Bloomberg Intelligence Senior Equity Analyst, covering some of these healthcare names here. Glenn, talk to us about UNH. What is the news today moving this stock?
So the news, good morning, first of all, good afternoon. The news basically that the Wall Street Journal broke a story that there is a Department of Justice investigation into Medicare Advantage upcoding from United Health. group. Upcoding means that doctors usually upcode the diagnosis, make diagnosis more acute. So companies like United, for example, or any other Medicare Advantage plan get much higher payments from the government, and that's the issue.
How do you anticipate United is going to respond to this?
So United issued a very short statement saying that Wall Street Journal has been sort of pursuing, putting a negative spin on what United Health Group is doing and completely denied the accusations. That being said, Department of Justice is investigating, we'll see how
common is it for, I mean, this goes to the heart of what an insurance company does. Diagnosis, submit, get payment. I mean, that's what they do. How common or uncommon is it for the government to look into these?
So these type of investigations are very common.
Common.
Or relatively common.
Okay.
This is nothing new. Usually, so investigations, the other thing is investigations can take up to a few years. Usually they are resolved in a settlement. Government is looking to make some money, and company just wants to put it behind them, and they settle.
What is the reputation of United Health? They're such a monster company. What's their reputation in the industry for this kind of stuff?
Well, it's very difficult to say, especially over the last 6+ months. The company has been heavily scrutinized after the murder of one of the executives. That being said, every company, as I always said, is there to make, every business is there to make money. So, unless they're doing something illegal, which very difficult to prove, I don't think there's anything.
What do you make of the share price reaction? Is it an overreaction to this news? Because the company's Medicare Advantage division is kind of small compared to the overall business, right?
Right. So relative to overall business, it's pretty small, but United is the largest Medicare Advantage plan in the United States. That's one thing. Another thing is a lot of revenue comes from Medicare Advantage for United. And the other thing that I think the reaction of the stock where it is, even though I do think that it's probably an overreaction, which sort of, today's news adds to what happened over the last 6 months with the company, all the negative sentiment. But I also think that investors are thinking that today's announcement is sort of the Pam Bondi introducing herself, and also partly, the Trump administration's showing that federal agencies are not the only target of waste, fraud, and abuse DOJ agenda.
So you think there is a political aspect to this potentially?
I mean, I can't say for sure, but
what's the feeling about the managed care business in general? I see the stocks haven't been great performers. How's the market feel about the managed care business?
So, first of all, United sets the tone for the whole industry, right? It's the biggest company, and sort of managed care companies usually trade in tandem with United, sort of setting the tone, and everyone else follows. As United sort of has these issues that they sort of try to navigate, the whole industry is sort of under pressure, right, because of it. So I think over the last couple of years, medical costs were going up. Everyone is expecting medical costs to continue to go up. My thesis that they're gonna start to ease, because 3 years after the post-pandemic recovery began, I think there are less people that will sort of seek care at the levels that they did after deferring seeing a doctor during the pandemic. So that could sort of provide a tailwind for United on earnings front, as well as the whole industry, but we'll see how it plays out.
All right, Glenn, thanks so much for joining us. Really appreciate it. Glenn Losef, he's a senior equity analyst, Bloomberg Intelligence, following those managed care companies. United Healthcare, the big mover in the market today, off about 8.5%. It had been off double digits earlier in the day as the DOJ investigates some of their practices there. We'll keep an eye on that. And that's been a big contributor to the Dow, down 380 points, 0.8%. So we'll stay on top of that. Story coming up. Munis in focus. Why not? It's Friday. We do Munis on Friday. We love Munis. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks are extending losses, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, Offer ends March 31st. Now, see if your company qualifies at oracle.com/Bloomberg. The Dow, the S&P, and NASDAQ all in the red after economic indicators this morning pointed to slower activity combined with higher inflation expectations. The S&P down 30, a drop of 0.5%. The Dow is down 335, down 0.8%. NASDAQ is down 116, a decline of 0.6%. 10-year at 4.45% with a 2-year 4.24%. Gold down $6 the ounce, down 0.2%. And West Texas Intermediate crude down 2.2%, 70.87 a barrel. Sources tell Bloomberg U.S. prosecutors and regulators are investigating a $32 million deal between CrowdStrike Holdings and a technology distributor to provide cybersecurity tools to the IRS. CrowdStrike shares, they're down 2.6%. Meanwhile, Akamai Technologies, an infrastructure software company, gave an outlook that is weaker than expected. At least two firms downgraded the stock. Akamai now trading at a 52-week low. It is down now by 15.1%. Recapping a Friday sell-off, S&P down 30, lower by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, folks, today's Focus on Munis is brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit BAMBonds.com. BAMBonds.com. The good folks down there, they take care of us. Let's talk municipals because it's Friday. We check in with Eric Kazatsky, Senior Municipal Strategist for Bloomberg Intelligence. Looks a little lonely there in the Princeton office. Eric, talk to us about year-to-date performance. How is your municipal bond world performing?
Yeah, hey, good morning. It is a little lonely here, but I'm happy to be here with you guys. Munis up 77 basis points year to date. Certainly not lighting the world on fire from a return standpoint, but we think there's a lot to talk to investors about when we go look at those tax equivalent yields, still significantly pick up over corporates, over treasuries. So a lot of things that, still make us feel a lot good about the sector.
Talk about that the advantage over corporate rated bonds. Why are we seeing that right now in the market?
It really goes back to the advantage that munis hold in the marketplace of being tax exempt, right? Exempt from state taxes, exempt from federal taxes. And when we sort of reverse engineer that and look at them on a tax equivalent yield basis, you're picking up about 80 basis points over like-rated corporates. I'm just using that analysis. We're using yield to worst for the muni index versus yield to worst for the AA corporate index. And it comes out to about 80, 82 basis points of an advantage for munis. And look, like we talked about in sort of previous conversations, a AA muni is certainly a better risk asset than a AA corporate for a host of reasons, correlation or lack thereof being one of them.
So is that advantage for those of us in high tax jurisdictions like me in New Jersey? Am I getting a good deal on munis?
Yeah, I mean, we put out a piece this week looking at high tax states in particular, California, New York, New Jersey, and New Jersey actually came out ahead, right? So we took that analysis. Yeah, Paul, great news for you, right? Buy those New Jersey munis. So if you're an in-state high tax New Jersey resident, you're buying a long-dated 30-year municipal bond, you're picking up over 100 basis points over a 30-year treasury. So really that advantage is pretty relevant right now.
I don't really know much about New Jersey. I'm from Connecticut. What is New Jersey doing with the money that they get from this bond issuance?
You know what? The state doesn't do a ton when it comes to actual general obligation bond issuances. A lot of it is appropriated debt, and it goes to transportation funds, education, things like that, that keep the lights on and keep things in good repair throughout the state.
Building top-notch schools. Okay. Got good schools there. So, all right, talk to us about just what's the new, I guess, where's these bonds? Are there any credit risks out there that you're seeing in the marketplace at all?
Yeah, there's a lot of cracks that are happening. We developed a sentiment model, using all these headlines that come across the terminal. And, we are pretty comfortable at this point that it will portend some spread widening and some bigger credit fissures in the state and local government space, 12 to 18 months from now, right? It's a slow moving train. But we're seeing this sort of play out on the federal level with all of these, efficiency cuts and DOGE looking for savings. We can't help but think it's going to have a knock-on effect to the local level, where there's going to be a lot of pushback from constituents looking to, their state and local governments to say, hey, where could we save to that might impact us on the savings level?
I'm looking at ETF flows right now.
Yeah.
A lot of interest in short-term munis. The iShares short-term national muni bond ETF. It's one of the top, at least for the last month of flows, one of the top inflows. Right after that, JP Morgan Ultra Short Municipal Income ETF.
Yeah.
Why are people focusing on the short end of the curve?
You know what? It comes down to who really is that buyer on the short end of the curve. And over the last 5 to 10 years, that buyer has really been defined by the SMA space, those separately managed accounts. And a lot of what's going on now is that a lot of these SMA platforms can come in and buy ETFs as placeholders, buy those short ETFs like that you're referring to as sort of a cash supplement to sit in the account, and then sort of sell out shares as they find cash bonds to invest in. It has been a play that has worked out, and you're seeing a lot of flows come into that space. If you're looking at just buying bonds in the front of the curve, probably one of the more expensive areas from a ratio standpoint, though.
But you get a better return than, I don't know, being in a money market ETF, even when, rates
you
are
get
high.
the exempt income from being in a muni ETF.
Ah, that's right. All right. A lot of discussion down in Washington about changing this rule, that rule. Taxes are also on the table here. What's the risk, if any, of the municipal bond market losing its tax exemption or maybe having it limited?
Yeah, I mean, in our view, it's very slim. It really comes down to how many bills are actually going to make it, past Congress and the Senate and ultimately to the president's desk. But right now we're assigning a low likelihood of the exemption going away. Look, this kind of money goes to building schools, funding infrastructure. It really has a societal good. And when you come down to it, if state and local governments have to borrow at higher rates, it's going to be a tax increase for everyone who pays taxes and is a homeowner in those areas anyway. And I don't think it's really something, politically unsavvy that a lot of people want to be attached to, removing it.
All right, Eric, thank you so much for joining us. Eric Kazatsky, Senior Municipal Strategist at Bloomberg Intelligence. He's based down there in Princeton, New Jersey. It looks a little lonely down there. Some big news out of Apple recently in the last couple of days, introducing new 16E, I think it's called, and it's a little bit lower price model. And to me, it seems like, if emerging markets, including India, are going to be a source of growth, they probably need a lower price phone. I'm not sure if this gets us kind of to where we go. But whenever we talk Apple, we talk Mark Gurman, Bloomberg News. He is the ace, the axe on all things Apple. He hides out in L.A. at our Century City office out there, hiding out, I say, but he comes to New York every once in a while. When he does, we grab him literally, we pull him into the studio here. So Mark Gurman joins us here, Chief Correspondent for Global Technology, Bloomberg News. Hey, Mark, talk to us about this new phone that Apple's coming out. It seems like a little bit lower cost. So is that going to give them an opportunity maybe in India and some of these other emerging markets, do you think?
Well, first of all, I think I'm going to have to spend some more time here because I've loved being here in New York.
There you go.
To answer your question, Apple killed the budget iPhone this week with the iPhone 16e. $600 starting price. It's more of a lower price compared to their other devices, but in terms of comparing to the rest of the market, the Google Pixel A series, the Samsung A series, the lower end Huawei, Xiaomi phones, you're double the price almost, right?
Okay.
So what they've done basically is take the $800 iPhone and they removed some features from it to bring it down to $600. They didn't go down to that $300 to $400 price point, even the $500 price point. So it is a pretty big sea change for Apple in terms of its lower end devices.
What does it tell you about Apple that I guess essentially they don't need to lower the price that much, right?
It tells me that they are not going after unit sales, right? Which they really should at the low end of the market. They're going after margins and profit, and they're going after revenue. And by moving from a device that's $430 to a device that's $600, right? They're discontinuing the $430 SE. You're naturally going to get a boost of sales and probably create some growth, even almost artificially, which is actually right with what they need right now, given iPhone sales, as you know, dipped 1% in the prior quarter, the holiday period.
All right. Mark, give us the latest thinking, if there is a consensus or the smart thinking on Apple and the China risk. Where are we today?
Well, like we talked about earlier, there's a few things at hand. One, you have the tariff situation with Trump in charge and President Xi in charge, right? And They'll figure that out. That's going to be a headwind over the next 4 years. I think that's just something we're going to have to live with. Tim Cook doesn't have much influence on that other than trying to get Trump not to tariff Apple products. So we'll see what happens there. The bigger picture is geopolitically and in terms of the markets there. So from a geopolitical standpoint, Apple wants to get as much as it can outside of China because they never know what's going to go on law-wise there. They never know what's going to go on between imports and exports there, right? To have all your eggs in one basket, to have an entire output supply chain in one place is probably not smart business. And so, actually, let me take a step back. We know it's not smart business because we saw what happened when COVID hit and they had to shut down their factories for an extended period of time, and that really impacted them from unit sales perspective and being able to get products out of the factories. So they're trying their hand at Vietnam, Thailand, Malaysia, Indonesia, 3 other places, a little bit in the US as well, not only for them, but their suppliers. The other component here is that the latest devices from Huawei and Xiaomi and Oppo and all the other Chinese players, they're really strong. They're better in some facets, including in AI, and they're cheaper. And so Apple really needs to figure out what it's going to do there. And I'm not sure the 16E is the solution for China. It'll help in India a little bit, where the technology innovation is nowhere near where it needs to be for India to be the next China. It'll help in other parts of Southeast Asia. It'll really help in the Middle East and in Europe. It'll do a little bit in the US. For China, they need something quick, cheap, fast, with a lot of AI, and they're not doing it.
And they have a history or a strategy of not doing it.
Correct. They've had so many opportunities to do so. You know, I would say there would be no problem taking the $429 iPhone SE that they discontinued this week, keeping it exclusive just to some markets, and slashing the price down to $299. Do you know what that would do for Apple in terms of their bottom line? Maybe not today, but in the future, bringing millions of more people into the ecosystem with a $299 iPhone, services sales, app download sales, iCloud, Apple TV Plus, bring people into the Apple ecosystem. So maybe they're 15 years old right now, but maybe in 5 years when they want to buy a $1,000 iPhone, they're already in the ecosystem, and they weren't testing out Android the last 5 years.
Their group chats are blue, and they can't go back.
Exactly. All right, Mark, thank you so much for joining us. I know you've been busy all week. When you come to New York, everybody wants to get a few minutes with Mark Gurman. Mark Gurman, he's the chief correspondent for global technology, Bloomberg News, really focusing in on the technological revolution and just the absolute go-to person on all things Apple. Breaks news almost every single week, it seems like, on Apple. Looking at the market here, S&P down 31, the NASDAQ down 123, about 0.5%. We're going to have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks bouncing off the bottom, but still a lot of red on the screen. The S&P, in fact, on track for a losing week as of now. The Dow, the S&P, NASDAQ, all getting hit after weaker than expected economic data raised concern about the outlook for corporate America amid a surge in consumers' long-run inflation views to the highest since 1995. Right to the numbers with the S&P down 30 now at 6,087, down by about 0.5%. We've got the Dow down 339, down 0.8. NASDAQ down 126, a decline of 0.6%. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. The 10-year at 4.46%, the 2-year 4.24%. Spot gold down $1 the ounce, $29.37, a drop of less than 0.1%, while West Texas Intermediate crude 71 even a barrel, tumbling now by 2%. Rivian Automotive shares down 3.3% after warning it is poised for a first ever decline in EV deliveries in 2025. Booking Holding shares up 4.8% after the parent to travel brands, including Kayak and Priceline, delivered better than expected fourth quarter results. Recapping, the S&P is down 30, a drop there of 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Emily Grafeo sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. So head over to youtube.com and search Bloomberg Podcast Now. One of the stories in the marketplace moving stocks here is U.S. prosecutors and regulators are investigating a $32 million deal between CrowdStrike Holdings and a technology distributor to provide cybersecurity tools to the Internal Revenue Service. And CrowdStrike, the stock is down at 2.84% here. Mandeep Singh joins us. He's a technology analyst. Mandeep, what's going on here?
Well, I mean, Carasoft is a reseller for CrowdStrike. So, and this is not the first time they've been in the news. They were involved with SAP contracts as well. And look, when it comes to accounting for these contracts, there is always that aspect in terms of revenue recognition and how these contracts are signed. So it looks like another DOJ investigation in terms of just how CrowdStrike was sold at the IRS by this reseller. And I think that's all we know right now in terms of, the fact that these two companies are involved and Carasoft is a reseller for CrowdStrike.
What's the precedence for companies similar to CrowdStrike for providing cybersecurity tools to the IRS? It sounds pretty. I mean,
most of the cybersecurity software is sold by resellers, and that's just unique to cybersecurity. That it's not a direct sales force model; it's more a reseller-driven model. And in this case, Carasoft is not just a reseller for security. As I said, it resells SAP software as well. I mean, I feel like typically in these cases, you change your go-to market slightly when, an objection is raised around a certain practice, and that may slow down, the order closures for a while. But other than that, it doesn't really change much in terms of the business for, established companies like CrowdStrike or SAP for that matter.
The company we all learned probably 3-4 weeks ago was DeepSeek. It rocked not only the technology market, but also the overall equity markets with a potentially cheaper AI product in the marketplace. Now I'm seeing news, Mandeep, that DeepSeek promises to share even more AI code. Pretty rare step here. What are they doing?
I mean, they're going big on open source. Really, when you think about the US-based large language model companies, even though Meta Llama had the open source approach, they never really, used that to drive adoption the way DeepSeek is looking to do. And in this case, from the time they published their paper, which really shook everyone in terms of the cost efficiencies they were able to achieve, now they are doubling down in terms of their open source strategy, really showcasing to the world what they use in terms of the algorithmic improvements, what are the things they did in terms of, the mixture of experts approach, and really letting everyone know so that, anyone who is in the business of fine-tuning or training a large language model can use some of those nuances that they have uncovered. And I think the US-based model providers are thinking to themselves, why didn't they do it? Especially Meta Llama. I mean, that was supposed to be the open source model, but they never went to the extent that DeepSeek is going in terms of sharing it with the open source community.
What do you anticipate the US response to a Chinese AI startup, releasing open sourced software essentially to the public? Do you have any expectation that maybe the US government would try and block Americans from using the software?
Well, so the thing about DeepSeek software here is you can run this on a Microsoft cloud and in fact, Amazon, AWS, Microsoft, Google, they have integrated DeepSeek as part of their cloud offering. So now the model isn't being run on any Chinese servers. The model is being run on US hyperscale clouds. And even though it's a Chinese model,